Hey everybody, happy Sunday and welcome to this Sunday event called Strategies to Stay Afloat in Today's Market. Today we're going to have 8 different presenters talk about their strategies using the TrendSpider platform and how they get an edge in the markets. To start off today's event, we have Bennett, aka Pattern Profits on Twitter. We have Adrian, aka CryptoBirb. We have Magic Mike. We have Valentina, aka ValCoins. Bob Desmond, founder of Contrarian Trader. We have Ross Haber from Trade Lion. We have Braden from BT Trading. And we have Rob Smith and Sara Sabatino from the Strat. So let's get started and see what they have to say about their strategies and how they find an edge in the markets.
Hey guys, it's Ben from patternprofits.net. I want to share a strategy I use with you today for big monster gaps. A lot of times you see one of these big earnings gaps, or there's a news story or an analyst upgrade, a new product. You see this big monster move 10%, 20%, 30%. It comes on huge volume. And most of the time you'll say, yeah, it's too extended. I can't get in here. I can't, take an entry way up here when it's already up 20, 30%. What I want to do is show you a strategy that I use with TrendSpider and anchored VWAP on the gaps that really helps find an entry. So what I have Mercado Libre up here, Melly, and you see this gap back here in May. What I'm going to do is put an anchored VWAP on that gap. Now, TrendSpider will do this automatically for you if you want to highlight all the gaps. But what you see here is that even though this was a monster move and a monster gap, you found support here after the first few sessions. This is a daily chart. So after the first few sessions, you found some support here from the anchored VWAP. Off it went. And these trends can last a very long time. Weeks, months. Most often we think about these big gaps and they flag and for swing trading them. And there's nothing wrong with swing trading if that's your time frame. But a lot of times, the bigger the volume here, when you see this big volume and this big move, a lot of times this is your key that something in the story has changed. So what I want you guys to think about is don't be fearful of this. Think about it in terms as there's new evidence, there's new data, there's new, maybe the estimates are going to go up, or maybe there is a new product or a new service. And this is your clue that we're getting investors piling in, the institutions are piling in. So the way you can do that, like I said, is put that anchored VWAP at your gap. You're going to find these days of support here shortly after typically, and then it was off to the races. And this plays out over and over again. I see this often. We've also talked in the past about a pass the baton type trade where this meets. For example, right here, you can create another anchored VWAP, and that's basically taking where it tagged, and at the low of the next base, here it played out again. The low of this base, you grab another anchored VWAP, the low again. So these things, this is the beginning. This is your cue in right here to start looking for an entry. And anchored VWAP in this way can really help you to ride, a big trend like this. Let me show you another one. Let's go to SC. Here's another, really popular one, SC. They just reported the other day. You can see here, this same pattern's just now starting. Here's your gap. Here's where you start your anchored VWAP. You can see that it's holding that as support. Nice day today, solid green candle. I'd expect to see this start moving its way up. Even if you come back down here in May, you had another gap here. Same thing. Tests it for a couple days, starts to take off. Here's your swing traders right here. Here's your swing. So there's your swing. For the longer term traders, here's where you come back in, test anchored VWAP, and then boom, off to the races. So, and again, same, you get that tag here, you can put another one on, look at that. Tags again right there, it's the low of one of your next major bases. So, you know, this playing out over and over and over, once you get over the fear of buying up, you know, and it might be 10, 20, 30%, you can ride this trend for bigger gains if that's your time frame. If you're on the shorter time frames, you can still use it. You can catch that, you know, the swing off of here. Maybe you take profit somewhere in here. This starts to pull back. You know, you've taken your profits here. Maybe you jump back in as it retests anchored VWAP. So on any time frame, you can even zoom into a 30 or 60-minute chart and do this, you know, same approach on the shorter time frames. If you're a day trader, it works just the same. Let me show you another one. Let's go to Digital Turbine. You can see back here. Now this happens. This is a little shakeout here. Maybe there was news, maybe you know, something came out here, or maybe it was just an ugly open. So again, we anchor the VWAP, big gap, big move here. Here's your swing, comes back. We actually undercut, but then you rally. So if you're a position trader and you do get, let's say, shaken out here, you could, as soon as it reclaims, you can jump back in. So you can get long again if you're a position trader, or if you're a swing trader, same thing. If you took this swing, comes back to anchored VWAP, maybe get shaken out. As soon as it recovers the anchored VWAP here, again, off we go. And then we just had another earnings report, got another gap. You can see it playing out again. Here's your anchored VWAP to this gap, a few days, we come back and test, off we go. Came back, undercut just a bit, and then rallied back above, and now today we held that anchored VWAP again. So very, very easy to manage your risk if you're taking your entry very close, you know, to that anchored VWAP. It's really easy, you know, to exit. If you close below, you get out. As long as that trend is up, you can, and it's staying above anchored VWAP, you can ride that for weeks to months, just like you see back here. Let's do another one. Let's go to Celsius. I was just talking to friends about this one last night. This is Celsius Holdings, hot energy drinks. This one, you had that couple days where it rallied, stayed. We did cut below here. You had that little shakeout here, quickly reclaimed. Once it reclaimed, had a nice swing here. You know, 4 or 5 sessions of gains there. Then again, kind of came back, tested that anchored VWAP, and now it's holding. You had a bit of an undercut yesterday, and it rallied late. I actually took this entry late yesterday. Kind of flat today on the session, but you'll look for that to turn back up. If you took this entry, we come down and close, you know, below, you get out, you exit. You're keeping that pretty tight to that anchored VWAP. So hopefully what we see here is this turns back up and off we go. Let's see what else. Oh, let me show you Nautilus. One of the things that I really like about using anchored VWAP in this manner, let's see. All right, so here's one of our gaps from prior. You saw this is exactly what I've been talking about, how we come up, we come back in, retest, actually retest a couple times, off we go. But what it can also help you with is keeping you out, because when you saw this big gap here in Nautilus, you may have thought, oh, here we go again, off to the races again. But if you throw the anchored VWAP on there, you can see how it came up and tagged, but it was resistance. And it was resistance in the high here. And it was resistance again here. And then it rolled over. So not only is it helping you to jump into those winners, you know, that gap up, and give you a real tight entry to manage your risk, but it can also be helpful to keep you out, because right here, you never really had that entry, or if you did take it on this little wick here, you could get out right away and keep that loss really tight. But you never really had the confirming signal. You didn't have a close above this anchored VWAP. So even though you had the gap, you know, here, you didn't really get a clean entry signal. And then when you see this resistance a couple times, then you know that hey, this one's not going to take off like the others. I need to get out here. Now, if you're still long from back here, you know, no worries. You can do, again, what we call the pass the baton, where you take the lows of each base or where it tags, and looky there. It just so happens that today came down, tagged that past the baton level. Now, you know, aggressive traders, if you were, you know, very high on this stock, you could have entered at that area today. What you'd want to think about, though, is entering this as a swing, because you're most likely going to get resistance as this descends, price comes into it, you're probably going to get another bounce lower. On the other hand, if you come up here, test this anchored VWAP from this gap, pull back a little bit, and then take it out, you're good to go on the long side, because now you're above that anchored VWAP from the gap. You know, it's also not a bad idea, and I keep these volume by price levels on here, because if this does kind of go sideways a little bit and lets that volume build over here, that gives you more confidence if this does turn up, that area is going to act as support. So if you do see, you know, it build the shelf here, or we do have some sideways action and it builds that shelf, you'll be a little bit more confident getting long here, in hopes that you reclaim this anchored VWAP from the gap, and then, you know, up and off you go. And again, you can hold this, you know, weeks to months, if you're still, the market's still healthy and you're still, you know, high on that stock. Let's do another example here. LMP Automotive. This is another one. I had never heard of this stock, but I saw this, you know, big volume back here. Nice move. Then you got the earnings came out, and the story here is they've kind of changed the way they lease, and it's like a subscriber based car program. And, you know, with the virus out there and a lot of people not wanting to take public transportation, more and more people are getting their own vehicles. They're buying used, or at least in this group is very strong. So again, same thing we've been talking about. You see the gap here, the big gap, strong move, huge volume coming in. You mark that anchored VWAP there. It's really easy to do this, you know, put them on and off. You just right click on the VWAP, and there you go. This little test down here came to the anchored VWAP, found support, same pattern you've seen play out from the others that I showed you, comes back in. Hopefully now we're going to come out of this little flag pattern, up and off we go. Sometimes, I think this was one of them, sometimes these lows you can actually anchor from, yeah, every once in a while, especially if I see one undercut the anchored VWAP, I'll actually put one from the day before the announcement, And oftentimes, and this just happens to be one of those cases, oftentimes if it does undercut the gap up anchored VWAP, you'll see that it finds support at this one. So keep that in mind. If you do start to see it undercut and just barely undercuts, but it's real tight like this, see where that other one is and where it sits, because you don't want to get shaken out here on this one if it's right underneath. Let's go to sale point. All right, so the thing with sale point that I liked is sometimes it's not always clean. And this is what I was referring to. Sometimes you can add one in here, even though you still had a little shakeout, but it's not always clean. So when it's not a clean entry here, not a clean entry here, not a clean entry here, but you see that it's firming. You had an inside day here. Here, when you go inside and up and reclaim that anchored VWAP, you can take an entry here. And you're using that anchored VWAP as both your entry and your exit. So we come up, reversed a bit, found support here again at anchored VWAP, boom, off it went. So the tighter you can get in here, you know, it's not bad to come in, like if you see inside, you wait for that to confirm, you get that big bullish candle back above. You may see that happen often, and that's why often on Twitter, you'll see me share both inside days and bullish outside days, because usually I'm lining those up, not always, but I'm usually lining those up with either an anchored VWAP or, like I talked about, volume by price. I'm usually lining that up with those support areas. So you can have a lot more confidence if you come in, you know, to an inside day, it confirms to the upside, and you know that you're reclaiming or you're above anchored VWAP, and you've got a volume shelf, you know, to support as well. A lot of times that can help with your conviction in that trade. We talk about it often, having confluence. When you have confluence, that's when you have multiple indicators lined up. And when you have, you know, that confluence of indicators, it can give you more confidence in the trade, both at your entry and also at your exit. Because if it does roll back over and those levels that you've lined up, and there's multiple levels, fail to act as support, you know, to exit and get out of there right away. Let's go over to grow generation. A lot of controversy about this one. So as you can see here, I have an alert set for a reclaim. But what happened here, you had the big gap, you had great volume, getting a lot of attention on Fintwit. Everyone was talking about this when this first happened, because the growth numbers are huge, hot industry group, and this initial pattern was beautiful. You came here from 12, roughly around $12, and really nice move. Then you had a short piece come out regarding the management and their history. So you got a shakeout here. But on this day, when it came out, it still held. So if you were watching, you know, the anchored VWAP from the gap, you were still in good shape here, even though it came back in. What you'd expect here is, you know, support and bounce. Unfortunately, what happened, the news just got worse over the next couple of days. They responded, it got a little ugly. You had kind of a hammer here, so it looked good. I wouldn't even, you know, if you held this to the end of the day, you didn't necessarily need to exit here or shake out here when this hammer printed if you're a longer term trader, a position trader. If you're a short term, a swing trader, yeah, you wanted to get out. Ideally, you wanted to get out somewhere in this move up. For position traders that were looking to it for longer term, this wasn't, you know, if you held for the whole day, early in the day, you probably got shaken out down here, but it did rally late and look good. But then, you know, come Monday, it was ugly again, a big gap down. So you definitely wanted to be out by this point. Even in the pre-market here before the gap, there was an opportunity to get out. So what I'm looking for now is that hopefully, and I'm going to throw this on here too. This is what I was talking about, how sometimes you can use that lower one, but you see how tight this was. This was almost identical because of how much volume came in and weighed here. So you couldn't really use that to find a lower level of support. So what you're looking for now is to see if this comes up, tests the anchored VWAP, and pulls back down, and then is able to thrust through and push through. If that's the case, you try to take an entry if you're still interested in it and you don't mind the drama that's going to surround it. Or is it going to come up, give it a tag, and then roll back over? So I think that's what you watch for. I've had so many people telling me they want to short this. Well, you may get an opportunity right in here. If it comes up, tags that anchored VWAP, you see sellers come back in, by all means, feel free. You get your short right in here, you can still keep it tight, because if it reclaims anchored VWAP there, you can get out and cover. Or if you're looking for it on the to take it on the long side, you look for it to push through that level, maybe come back and test, and then off you go. So, you know, all of these, and it doesn't matter, you know, which company we're talking about, or whether your bias is long or short. You know, the main goal here is to get in with a very, very tight stop. And if you can take that position real tight, minimize your risk, and know that you've got it. I love to see the buyers come in. So zooming in sometimes on the shorter time frame, you'll see a big green candle and a volume spike, you know, maybe on a 5 or 15 or 30 minute time frame, or maybe you see an inside day, and then we start to take out that high and move up. Same thing on the short side. There was one more. Let me see. This was a recent one. Oh no, that's not it. Let's see, what was the other one? But let me go back here to Nautilus for a moment. So Nautilus, going back to this one, again, if you come in here, if you took this at the lows, you've got a very tight stop. You've got a little bit of a volume shelf here. So you're really, really clean on this. If it comes down and takes that out, you know to get out, and you can keep that really, really tight there. If it does happen to come below here and you haven't come in, you have these next levels and these next layers, but I like to match that up, you know, with the volume by price. So if this level doesn't hold, I've got to start thinking that, okay, we're going to have a little bit of a deeper correction. And I see that, you know, my big area of volume support is much lower. So you want to keep that in mind. If these levels do start to fail, use those volume by price levels. I don't know where I'm at with this one. Yeah, use those volume by price levels to help guide you if these levels do start to fail. You can take this one real tight though. Here, let's see. This is what I was talking about too. On this one, if you did happen, like we talked about, to put that anchored VWAP from the day before the gap, it tried to hold, but you never really had that clean entry. I love to see when they go above anchored VWAP, come down, test it, and then start to turn back up. That's the textbook action that you really like to see. Back here. And if you throw one on here, it didn't even quite get there. So when you don't test that lower one and stay above the anchored VWAP from the gap from the get-go, that should give you more conviction, especially if you're long here, that off we're going to go. Big volume, you always like to see that initial move associated with big volume. Many times, if you see a big gap like this, but it's not accompanied by monster volume, and when I talk about monster volume, I want to see 300% above the 20-day or 50-day average, 300, 400. The higher, the better. The bigger that volume is, the better clue you're getting in that the institutions, the big money, the smart money, they're piling in. So when you see that big volume cue, you get that nice trend up for the few days as they're coming in. This is your inhale. Here's your exhale as they come down. Test that anchored VWAP. Off it goes. That's the textbook action that you want to see. If it does happen to come in, shake out a little bit, like we saw in Digital Turbine, this type of action where it comes down, shakes you out, as soon as you get that reclaim, you can jump right back in and then hopefully catch this bigger trend. The beauty is, if you've come in back here at this gap, you've ridden this up for weeks or even months, you are a very strong hand at this point going into this earnings announcement. So when you get this big gap here, again on big volume, you are in a great position, not only to compound those gains from before, but now I've given you an idea of how you can take another entry and keep that risk minimized. And hopefully this one gives you another 2-3 months into the next earnings report, and you've ridden it from back here. You imagine this goes up another 10-15% from here into that next report, you're a super strong hand owning back here in the single digits. So anyway, I hope this helped you, gave you an idea of how I use anchored VWAP with gaps. Don't be afraid of the gaps. Oh, I did want to show one more thing. Just in case you wanted to see the gaps and have them highlighted for you, TrendSpider has Gap Snake. So there's no confusion of when there's a gap, where there's a gap, where you want to anchor. You can automate this so that it automatically anchors anchored VWAP at those gaps. It doesn't get much easier than this, spotting them. So using technical analysis with TrendSpider, making it easy to both see your entries and exits, keeping your risk managed and very tight. I'm hoping here's another one that we can ride into the next earnings report. I took this one, Celsius. There you can see the gap. I'm in here. Hopefully we make that turn, bounce support. If not, I'll be out, let it come down, wait for it to set up again. Thank you guys for tuning in. Again, this is Ben. You can catch me, patternprofits.net. That's the blog, or Pattern Profits on Fintwits. Thank you.
Thank you so much for that, Ben. We always enjoy your insights using the Alpha Trends anchored VWAP. Now let's move it over to the crypto side of things and listen to what CryptoBirb has to say about how he speculates in the crypto markets using the TrendSpider platform.
Hi guys, it's CryptoBirb here, or well, as some would dare to call me Adrian by my real name. I truly appreciate the invitation from the amazing team and crew from TrendSpider, with Jake being, my almost like a bloodmate with Polish roots. We are very good friends. I'm very happy to be head on this very amazing series for the way I interpret the markets, for the way I use and apply technical analysis and technical tools provided by TrendSpider uniquely, and not only, and how do I kind of like implement that in my own trading strategy that I think works quite well. To start with, perhaps what some of you may be aware of me or not yet, is that you can find me on Twitter, right, at crypto_birb. If some are not familiar with my kind of like branding or persona, just make sure you go ahead on Twitter to check out all this stuff. I'm actually crossing 100K followers, like the matter of hours or days. So any follows are definitely appreciated. But before I truly want to deliver and prove to you that there's so much value in TrendSpider's tools that I love to use and that I apply in any sort of like market webinars, market research, market reports on a very regular daily and weekly basis. And to start with, I myself, I'm mainly a cryptocurrency trader, right? I've been trading actively since 2017, and well, I'm very happy to actually have joined the party where it actually emerged, right? I joined to trade crypto actively back in April 2017, right before the greatest rallies in crypto history kind of like kicked off and started. And I was very happy to discover the amazing nature and soul unique approach that a trader needs to have when trading cryptocurrencies when compared with other markets. And the truth is that, for any sort of like trading strategy, there needs to be also the fundamental background, right? So that you just make sure that whatever you are trading is actually meeting some minimum limits for being approved and acceptable, and just safe enough to trade it at all, right? Because all we know, there is, especially in cryptocurrency, but also in stocks, when penny stocks, right, on some low capitalization assets, you're going to know that they are super volatile. You're going to know that they are more often than not super risky, right? They can provide you with very high rewards, but at the same time, it also comes with very high risk. And it may happen that they just simply exit scam on you, right? It may happen that a company goes bankrupt and just dumps all their holdings or liquidates their entire being on the market, and you're just left with worthless pieces of paper, of contracts, or options, or simply spot cryptocurrencies, right? And this fundamental vibe needs to always be present. In the background whenever you make a trading decision, right? Only then, when there is a fundamental value and fundamental reason behind your monitoring certain trades, monitoring certain assets, only then can you, or should you really go and dive into the technical aspects that should also come and be combined with the intermarket analysis and sentiment analysis. So this kind of like a set of 4 or 5, in case of cryptocurrencies, including the on-chain analysis, the wallet activities, on the blockchain. These all combined are going to let you and help you just make sure you optimize your strategy to bring you and generate you the most profit and revenue, which is the objective for any trader. But focusing solely on the technicals, applied on the TrendSpider amazing interface, I think it's very important to, well, if we're starting with Bitcoin, let's have it, versus USD, okay, in Bitcoin USD pair, okay, on the Bitstamp chart on a daily time frame, right? I think it's the very first question for a serious trader to answer in front of themselves is to what time frame do I want to trade? What time frame I want to associate my strategy, my thoughts, my energy around, right? If I want to be a short-term trader, if I want to do intraday scalps, if I want to do medium-term trades that take between 3 weeks and 3 months, or even if I want to be fundamental positional trader that, just like Warren Buffett does, invests more often than not for years, right? For long-term fundamental trends, while not really paying too much attention on daily fluctuations or tertiary trends, just the way John Murphy would call that. And when you have decided on that, only then can you, again, truly understand what you are looking for in the chart. The chart itself, the candles, right? The candles, or if you're using the bars, right? Or if you're using the linear chart to just show you one value at a time, right? For a given session, be it, closing price or opening price, minimum, maximum, and so on and so forth. You can just have it the way you like. Or if you use the hollow candles, right? Or if you use the amazing raindrops, right? Listen up, I'm a great fan of raindrops. I think this is such a unique approach to analyze and view the markets that is literally a perfect combination of having the price details combined with volume, right? And although it's not necessarily built and constructed in the same way, just like candlesticks are, to provide you with the maximum, minimum, just the open and close. Instead, what you're looking at, right, is nothing else than just the series and combination of volume weighted average price, right? You would have the volume profile attached to that also. That is going to show you on the left hand side, on the left, let's say, half of the raindrop, like this, first, let's say, half of this period, okay, volume profile, and the second half is going to show you the second, let's say, now half of the profile of the volume profile, right? When you combine and merge it with the very interesting concept of VWAP, or the volume weighted average price, it's going to show you a bit different stories and a bit different picture than when you compare it with regular candlesticks that I often use very most. And it's showing a different story because it implements one of the most key technical factors into technical analysis in the market reading, which is the volume itself, right? The number or the number of this entire, let's say, volume amount of transactions within a given period that got closed, right? As opposed to the open interest. And by implementing and combining the volume and the price, you're able to read the market in a more reliable way, right? Because the price itself is backed by volume automatically, which you cannot tell about regular candlesticks. So this raindrop chart analysis, right, is going to help you discover whether or not, a drop, let's say, in price, right? Let's take this drop, right? This entire, like a big, thin raindrop of gray. This is going to tell you, okay, that the majority of the entire volume, let's say this entire, like a price interest zone, okay, was oscillating. If you account the volume profile on both ends of both halves of the raindrop session, which is daily, okay, so 12 hours on the left and 12 hours on the right. By the way I read it, you are going to notice that there's weighted just volume average prices as well are included around this area of the volume itself, right? So it just tells me that this area between 10.9 approximately all the way up to 10.5, right, or to 11.5k thousand, this is going to be the strongest significance for the pricing itself, right, for Bitcoin, as per recent consolidation which is kind of like, just stretching, past days, past weeks, right, on Bitcoin. It does definitely let you easily tell and, well, decide about the momentum, right? When there is a strong, I would say, volume on both ends, when there is a full, complete, like a coverage, on the by volume look profile on both halves of the period, it's going to tell you how strong a raindrop is. And I personally think, I use it as a confluence tool that is providing me with information that, okay, this and that period of this and that zone in the chart is of great significance for me to focus on, so that I know that whether or not, this zone gets broken when it goes, broken through when it goes to the upside or to the downside, it's going to simply weigh to work as the support or demand, support level or support clusters, which is demand zone, right? Or if it's following the other direction, the opposite direction, if it's going to work as the resistance or level or resistance clusters areas, namely supply zone. So I think even if you prefer to go and analyze, on a lower time frames, let's say give it a 4 hours chart, right? Then you are going to notice, that certain levels are of more importance than the others, right? And let's take this one. I put a lot of kind of like a, just pressure, I should say, or our attention to watch the pre-breakdown levels, right? The pre-breakdown levels. And this is very important to know that, this candle, right? This candle in here is what I call a breaker candle, or candle, well, or a raindrop. It doesn't matter, because it's in this very context, in this very situation, it's going to look similar. But if there is a big thrust candle or a raindrop in the chart, then you want to make sure you watch and observe the one before. Because if you do, then you know that if there was a serious breakdown, then it truly means that the session before, that the low of the session before, right? Let's take this low, as I said, of this tiny raindrop. This was of significant and special importance, based on technical analysis, that once it got broken, it resulted in cost and triggered such a big sell-off, right? So it means that this support had to be of great strength, that again, once it was kind of like broken through, there was nothing to stop the selling pressure, right? Unless or until it reached this significant, support of the low of a raindrop, and at the same time showed where the raindrop kind of like was having the greatest significance on the second half of this period, right? On the second 2 hours of this period, which is supposed to be, around the VWAP, and at the same time, the volume peak. Okay, that is going to provide me with the level of, almost $12,000, right, for Bitcoin itself. And when you combine this confluence tool of raindrops with my favorite indicators that are of momentum oscillators, then I dare to call that a deadly weapon for any sort of like an investor or market technician, because it gives you quite an edge, right? You, in one picture, okay, you have the candles, you have the volume, and not only the volume itself, but the real volume, the volume weighted average price. And when you combine that with the actual momentum, okay, per how the oscillators work, you're going to easily know where to expect the reversals, right? Which is again the holy grail for an investor, and it works great with the combination of my two favorite moving averages, that are the black one, the lower one, the bottom one, which is let's just quickly make sure it's visible. And I mean this one, right? this one in here. This is moving average 200, right? It shows you 200 averaged price of 4-hour periods, okay? And especially when you compare that with the orange line, with the orange curve that is represented, that was actually presented with the MA50, or should I say SMA50, the simple moving average, which I prefer to use on cryptocurrencies and on other volatile assets. This is, again, giving you the setup, the perfect setup for the analysis, to approach the analysis and market reading. And I think it's generally very important to know and understand what the averages mean. Simply, some people will tell me or ask me, just why I would not use EMAs, why I would not use, weighted moving averages, or EMAs, which is exponential moving average, that is form of weighted moving average, or any other moving average, for cryptocurrencies, for Bitcoin. And the answer is the volatility to me, because the exponential or weighted moving average, it assigns specifically a larger weight. And if it's exponential EMA, it's going to assign exponentially larger weight to the most recent and outstanding variations and volatility on the chart. So when there is, less liquid asset, like penny stocks or cryptocurrencies, that involves a lot of market manipulation, the specialist breakout, as some people will call that, the Wall Street people, lots of fake outs, fake bear traps, bull traps, and so on and so forth. This is the way to chase the liquidity. This is the way for the larger money to scale in a position. Otherwise, they are not able to, just enter or exit the market without causing big slippage, right? Which is definitely not desired, and not something that the good investor just simply wants to give it back to the market. And applying EMAs, right? Applying EMAs, if you go and actually just use the indicators for EMA, exponential moving average, okay, you're going to discover, let's make it, I don't know, orange, right, with a thicker stroke. Let's make sure I apply that, right? It shows you, well, of course, because of lower period included, it shows you more, it's more correlated with the actual price of an asset. But at the same time, because of lots of fake outs, lots of bear traps and bull traps, it's going to assign the largest importance and significance per the number, per the value to such moves, which often distorts the picture, which often does not tell you the full real story. So for volatile assets, I prefer to use simple moving averages. For less volatile assets, just, I don't know, for crypto, not for cryptocurrencies, but for all the regular traditional cryptocurrencies. Just like you go, I don't know, with Swiss franc versus PLN, which is Polish zloty currency, my own country homeland currency, then you can easily apply the EMAs that is going to show you the more honest and exponentially weighted, just importance to the most important moves that are very hard to manipulate, in fact, unless there is like some speculation attack, on the currency, to destroy the currency, to distort the disturb the economy. Just, it happened, not so long ago with Turkish lira, right? And the truth is that, again, the combination of momentum, of averages, of well, optionally raindrops as well. Although I am a bigger fan, in fact, of using raindrops or traditional markets, except for forex, for currencies, right? I would use it for metals, for gold and silver, for stocks, for Tesla, especially that it's so soon going to introduce some splitting stuff, or silver as it is in here, right? For metals and other commodities. You would apply that well, because again, it shows you the volume. It shows you the volume, the real volume involved, especially on the derivatives, when it's futures, when it's forwards, OTC, or options, swaps, whatever you name it. And what I think is definitely very important to be mentioned in here is well, just on the example of silver and 4 hours chart, right? You can easily apply the very simple trend line analysis to expect some sort of like movements that, for example, although there's just one kind of like a spot to anchor the trend line. So technically you would have, mathematically speaking, unlimited number of possibilities, right? Or amount of possibilities that you could just conduct the trend line. But combination with of this anchoring of the low of this entire, like a significant drop for silver, which was actually pretty good, right? It was really smooth drop, for almost 19%. Or if you measure that from the peak, okay, from the anchor, it's going to show you like 20% in total. It's huge drop. Silver is a very volatile asset when compared to gold itself, especially when there is instability. There is no enough stability in the economy, right? The truth is that this coronavirus and pandemic is having very serious consequences, and I don't like. I personally am of the opinion that the coronavirus itself is just a tool to kind of like, again, put a blame on for disrupting economies, right? And disrupting and overheating the economies of, well, that comes with unlimited inflation, with unlimited printing money, with an unlimited. If you think about it, over the last year alone, there was 30% approximately increase in the M2 money aggregate supply in the economy, right? So it's hugely dangerous to play with. It's like playing with an atomic bomb, right? Nuclear bomb. It's hugely dangerous, and this is the reason. This is the reason why of course, the stocks were pumping like crazy. All-time high has just been freshly set on SPX. Now let me just load this all on SP 500, right? S&P 500. If we put in the Dow Jones Industrial Average, I think it should. I think, or if we even apply the fix, volume that is required for the given. That's interesting. I think there might be some connection errors. Anyways, what we need to know is SPX or S&P 500 actually, just brought and introduced new all-time high, right? And for people who don't really interact or engage in understanding the economics, the chart looks great. It's new all-time high, right? The economy has never been stronger. But the truth is that this entire, just black swan drop on March 13th and the period around was just quickly brought back to stabilize the economy for the time being temporarily with the freshly printed money, right? So it's a very interesting phenomenon to observe. Many economists would argue, for example, that a couple of years back, it would not be possible to have real negative interest rates. But for some reason or another, it keeps working in some countries already, right? So the world is literally kind of like collapsed upside down. And how does it impact the market? It does impact the market in the way that people search for security, that people search for storing the value. And because of huge printing money, increasing the supply, the buying power of dollar or other currencies involved is going to decrease, right? And hence the inflation itself is going to, soar and surge, and is going to keep just simply growing and building up. And people don't really want to hold their holdings, their savings in fiat anymore, because they know that, okay, it's losing so much value over just 1 year. So I'm not that stupid, they would think, to hold money in fiat or in whatever is actually losing, the value for me, right? So I would go and prefer to choose and switch to something that's been considered the store of value since ages, which is the gold and silver, right? And that's the reason why gold actually very recently, has well, reached to new all-time high, with an amazing push when we flip it to actual candlestick chart, right? You're going to notice that 2017 units or dollars per ounce of gold, okay, was truly just a very significant breakthrough moment in gold's history, right? After past 2013, if I remember correctly, all-time high of 1940 was it. At the same time, the dollar, back then was of completely different inflationary, and the inflationary and deflationary value than it is right now. But the truth is that people and investors are aware that the economy is not necessarily stable so much anymore, right? Because of a huge divergence, like so much unemployment, and at the same time, companies, just keep, recording less earnings, but the prices keep growing, right? The price to earnings ratio is just simply increasing to the heaven, through the roof, and this is just simply not healthy too much, right? And there might be again some second wave of economic recession coming that is not necessarily combined and directed with the investment markets, with the financial markets, but more like the overall economy slowdown, with GDP recorded already to slow down significantly. And this is just a perfect trigger and perfect reasoning behind buying into the metals, buying into the store of value assets, which is again gold, silver, like palladium, platinum, and boom, digital gold, which is Bitcoin. And if you think about it, the Bitcoin itself was created for exactly the time like this. It was created 2 weeks. It was actually launched to the internet 2 weeks in 2008 after the Lehman Brothers Bank collapsed. That initiated, publicly, let's say, to the public notice, this entire downside rally and huge economic recession of huge, results right after. And Bitcoin was created for such purposes as an answer to uncontrolled inflation, to uncontrolled printing money, with a stable deflationary system of decreasing supply that is available, the circulating supply, with 21 million coins to be ever mined, right? And with many halvings ahead, with third halving like just behind us already, past. I think Bitcoin may really follow as the digital gold, the new all-time high, right? And especially if you take it on the weekly chart, it's going to tell you how bullish it has actually become recently, right? And if you take it, actually to to the most important trend line that exists, for the linear chart or for the candlestick chart, okay? Then you're going to see very simple buy signal for long term, which is the breakthrough moment of breaking above the trend line, the bear market trend line. It tells me nothing else than this entire push through, right? It does not only kind of like go past this prior highs to make it a new higher high that is allegedly confirming the uptrend continuation, but it also provides at the same time this huge important breakout that even if it gets kind of like retested on the lows, okay, on the lows, let's say, again on the trend line retest, or even the moving average 50 support, or even in case of other black swan event, just drop towards 6K levels. Again, just the way in here, I kept repeating how paradoxically bullish this drop is, right? This was nothing else than just huge demand that got filled instantly, like a flash crash. And this entire 38 to 53,400 period level area in the chart for Bitcoin was supposed to be of huge demand. And we kind of like never touched back to this level, right? So it just shows how strong, this Bitcoin pressure on the new all-time high, and the popular belief that Bitcoin may actually help you diversify next to the other store of values, store of value assets, it would just literally let you hedge against the potentially collapsing economy inside collapsing, right? Because on the surface it looks good. Yeah, I just, the final thought very quickly I want to leave every viewer with is you want to know what you're dealing with. You want to know always the education that is included and involved in, well, manipulating and just manipulating your own money, should I say, applying, trading, investing your own money, right? The first thing you always come with is the knowledge. And when you're good with knowledge, when you actually learn the tools, when you see a raindrop chart and you're not going to, just read about it, right? We'll read all the amazing instructions provided by TrendSpider crew. Then how on earth would you kind of like want to dare and risk all your money, so irresponsibly to invest while not knowing what you're doing? So go grab a book. If you have not so much portfolio, you always invest in some good courses and books, right? You find your own mentor. Everybody needs to have a mentor. Everybody needs to have an authority to rely on. And when you find these people, when you surround yourself with creative people that want you, that feed you, that give you the edge, that give you the strength, that teach you to believe and learn, this is how you're going to gain your edge, and to gain the advantage over the market. And that's it, guys. I think I really want to thank you for listening to that. It's a greatest honor. It's my greatest honor to be on this session today. And I just want you to make sure, and I just want to make sure that, again, if you search for some help or you want, you have some certain questions, my DMs are always open. You go on, my Twitter account, right, which is crypto@_burb, right, or @crypto_burb. Shoot me a DM. I answer the DMs, and we are going to communicate and talk on that, right? I really hope you enjoyed that. Stay safe. It was CryptoBirb. Peace out. Cheers.
A big thank you to Mój Polski Bracie. And let's go on to stocks again, looking at some of the charts with Magic Mike as he goes over his strategy on using trend lines and other types of features on the platform. And then on top of that, we'll go into some other crypto as well as options things later in the show. But for now, let's stick with the stocks.
Hey guys, thanks for having me on today. Today, I guess I just want to cover some of the charts and kind of my strategies of what I do. I appreciate TrendSpider having me on today, but what it is their software has really helped me create some ways of, I guess, monetizing my way of trading and how I analyze charts. I come from a background of really just trading OTC stocks, over the counter pinks. So very micro penny, trashy kind of junky companies that are trying to make their name in the world, so to speak. So I was more of a fundamental trader. I didn't really trade off charts so much in my earlier days of trading. So I took that path of, understanding OTC markets, because some of those stocks really ran as far as, 100%, 1,000% in one day in just a matter of a couple hours, and made some really good money, but it was very, very scale in, scale out managed type of way. Anyway, long story short, I've shortened myself up to kind of process options trading now, and that's kind of what I do full time now. And with the charting software that I've used now with TrendSpider, it's given me a way to really master my roadmap, as you will, I guess, when it comes to some of these charts. But these charts are literally set up in a way, because when I first started, I had to draw my own trend lines. I didn't know there was a software such as, an automation to help with the trend lines. And things of that nature, which makes it really nice to help me just quickly pull up a chart and say, hey, boom, this thing is riding this trend line. But I've learned to train my eyes, I guess, to kind of just play along with it, and find the 2 points and the 3 points of contact to draw that trend. But just in general, I try to trace some of these catalysts for sense, like earnings plays. We do options most of the time, so I'm always looking for the next week of options plays to roll around and checking those earnings and then checking those charts. And as you see right here on my right side, I put up a earnings watch list that covers up, all the plays that caught my attention for potential earnings this week. And of course, they're all panning out, according to how they're playing out for the week. And I'll mark it right up here. As you guys see, it shows ER is 824 after hours. So I know right away what's happening with this chart beforehand, and studying this generally on the Saturday or the Friday or even the Sunday before the week starts. And as you see, it has a nice run up to it. It showed that it's hit constant resistance. And I love the way that, charting has given me to be able to, section out these areas that, that was going to be resistance. We hit it. Earnings came obviously on this white line, the date that I put in down here for August 24th. And it's giving me the sign that, okay, well, let's see what happens after that. Obviously today we gapped way down and actually pushed up a little bit off of open, causing a green candle there. But I love the fact that, to go from, the fundamental standpoint of OTC to now just charts, which I've been doing this for about, I guess, 8 years in total. But with with this process, TrendSpider's made a really, really handy tool to that. I can just, put these lines up really quickly, chart out a play, and really take it from there. So as you see right here, Beyond or Best Buy actually pushed out they actually beat their earnings. But as I've been noticing lately, a lot of these stocks have really been, selling off when earnings hit. It's like everybody's playing the anticipation to the earnings report and then selling off even if they beat. But today was really a phenomenal day. Not necessarily just earnings plays in general, but things like Facebook. I love to play these 5-day breakouts. I'm not much of a dip buyer when it comes to plays, but I love to find consolidation periods on a chart. And if I'm a little random, guys, I do get a little random sometimes, so excuse me on that part. But in this sense right here, I love looking for periods of consolidation. And it's showing me that the chart is breaking between the buyers and the sellers, or the supply and the demand, as you want to call it. It's showing me a period that volume is just breaking even for a period of time, and that catches my attention very strongly. When you're looking for some charts that are consolidating for days and days on ends, and we're using daily candles for this, continual times of periods, it shows me that the market is breaking even every single day, and there's going to come a point in time that it's going to pop. I mean, I can pull over here to Roku right away, and you guys can see that very quickly as well, that I'm watching Roku like a hawk. You see exactly what I'm talking about right there. It's consolidating between 152 and 143, more so 146 and 152 continually. I mean, I've got literally like 2 weeks of data right here that's going sideways. There's going to come a point that this thing's going to pop. And you guys know I have zero entry on this stock, but it's catching my attention because it's in a period that a moment is going to break. And my entry isn't going to be on the dip. My entry is going to be when it pops, that 152.13 there. So as I've pulled it back, I've been trading Roku for a long time, but you see, we've got this symmetrical wedge. I love trading patterns for say. So with that being said, I'm always watching these patterns perform, and I've been teaching my students on how to watch for these. But we've hit these constant trend lines. We've got 2 points of contact, showing that our trend line is true to that point, and that's where she bounced down. She's bounced off of this continually, and it's given us into a tight wedge. This was an entry right there where I actually broke out of that entry. It took a couple days to do it, but it made a really good swing play. And those options, I want to say that we played that day. This was back into June. This play jumped up pretty substantially. I want to say our options ran a good 200%. Some of you guys that don't like to play options and are scared of options, there's nothing to be scared about options. You just got to understand how to play the chart to jump on those options. Obviously, if I played the stock itself, from what was it, 130s? I think it was 132 was that number. Yeah, 130, 132, around this area. When it broke out of that period, going from 132 to like 159, 160, you're not making that much gain if you just buy commons, unless you want to stick, $500,000 in there and you're making a couple, a good couple thousand out of it. But Well, that being said, options, you're risking, a couple $1,000 or however much you want to throw in there, and you're playing an option that's near expiration in an anticipation of it breaking out. Okay. So obviously we're not playing something that wants to, expire in 1 week or, I'll day trade those, but as far as a swing play, I like to play at least a month of expiration. So some of you guys that are playing options that expire, 2 months, 3 months, and they're way deep in the money, which I mean by deep in the money is that, I'm betting the stock to go up to 160. But if I want to play something that's low risk or deep in the money or show me, security of what I'm holding, I might play a 120 call that expires in a month or something. But in this sense, I'm a high risk player. I love the volatility that high risk brings. So in this sense, I'll play some 160 calls out of the money, a good $20, $30 out of the money, just depending on the chart, and play it with an expiration of a week or even 2 weeks. It's very risky, but you can make 20, 30, 50, 100%, 200% very quickly. It's just you have to manage it very, very carefully. So I don't like to throw anything out there. You obviously you can buy how many contracts you want, as one contract represents 100 shares of this stock in the move. So you want to be very careful with it. Things like Tesla, I love playing Tesla. Tesla and Amazon are probably my two top favorites, along with Boeing. But Tesla, I know Tesla like the back of my hand. This was in a period of consolidation as well. Waiting for this period right here. All of us guys got in where we were waiting in this channel to break. Okay. And this is just exactly what I just talking about on Roku. I'm waiting for Roku to break that period of consolidation. This 1534 area, this was our last consolidation period that we played between 1369 and 1534, that has showed me continual sideways in no strength yet, but showed me that it's going sideways, that the volume is slowing down. It's really low down here, and nothing is really giving us clear direction. So obviously day trading this day is a nightmare. I mean, it's a death to options. You can't day trade options in a period that is just not going to give you much movement like that. So with that being said, I'm looking for those breakouts. Okay. And what I mean, how I draw those specific, lines, I mean, it's pretty clear to me because I look for the common denominator on these, daily candles per se. So with that being said, I'm looking for the period of, let me get my cursor here. This right here, this candle touch there, this candle touch there, this candle touch there. I've got definitely some good push there. I've got bounce here, bounce here. I've got close to a bounce right there, and obviously some resistance there. So I'm trying to find the common channel that this stock is trading. Okay, the trend lines, resistance, and support zones, even horizontally like this, give me a channel and roadmap to know where the stock would be a trigger point to enter. Okay, I'm not just buying a random candle and be like, okay, let's buy here and wait for it to do whatever and be in a death roll when it finally pulls down to a support zone. And your options are like 100% down. It kills your options. It's death to it. So you have to be very precise when you enter an option in accordance to what you're playing on the chart. So obviously, I don't like to clutter things. I don't use a lot of indicators. The main indicators I'm really focusing on is volume down here. Sometimes I'll throw volume by price up here on the right. But other than that, I'm pretty basic. But anyway, with this said here, we entered some options, some 2,000 calls that expire literally in a week. And guys, those 2,000 calls ran from $3 and something all the way over $80 by the time it came up here. I mean, that's some serious gains to make on that. And it was fun. Okay. Don't get me wrong. I didn't hold through the whole, fiasco to get to $80, but it ran to, let's see what, I think it was $3 to 15, then from 15 back down to like 10. And then from 10 back to like 30, and then 30 to 50, and then all the way back down to 3 again. And then the other day, this big move right here, this candle right here on, what was it, August? That was the other day, August 20th there. We had that move from 1835 to over 2,000. This made those exact same 2,000 options that we were playing for August 28th. That's what we played from this point on, was from August 12th here to August 28th options for 2,000 calls. They ran all the way from $3 a contract all the way to 80. I mean, this one candle alone made that kind of move. So obviously, if you guys are looking for small, low float, whatever stocks you want to look for, you make that kind of move. It's like, it's all you can do to find a stock that's going to run you through, $3 to $5 to hell, if you're lucky, $10 in a day. But I'm over here throwing with options that can move 20, 30, 50, $80 a day, and you're making move off of that. And with one contract, it equals 100 shares of the stock. It's high risk. Okay. I don't like to advise people to just jump into it if you don't know nothing about what you're doing. It does come a lot in play to touch something that is the right strike in accordance to the chart, the right expiration. All that plays a factor in how well it'll move with the stock. Because some of these stocks, like I said, if we're getting sideways movement, and I trade off of 2-minute candles off the day because we're playing the noise. Like today, Tesla really didn't do that great on options. But what I love about TrendSpider is it'll throw these resistance and support zones up here. And you see here on my 2-minute candle, even on the daily, this trend line right here, the 1967 and this 2022. I'll throw up a second chart right here, actually, real quick, and you can identify that on the daily. It shows me that is going to be that channel that I was trading with. So 1967 right here, I'll circle it for you guys. 1967 and 2022. This was our candle today, was this guy right there. This is what the noise did today. And that's what you're trying to trade. You're trying to find momentum when it comes down to that point of support. And just like that, Tesla played off of it. And just like this, it played off of resistance. But why did 2022 become resistance? Well, I'll show you why. Up here at this candle right here on August 20th, we had a period that the stock could not get beyond that price. That automatically becomes a resistance, okay? Daily candles become our day traders' resistance, as you will, okay? At some point in time, that's going to show that is going to have a hard time breaking back through on the upside, or if it does get above it, it's going to be not as easy for it to break down below it. So as you see the next day right there, we gapped up, we shot up, we saw some good movement right there, and then obviously came back down, and it held as a way of support. So it's very important to understand that. And trend lines, these diagonal lines, can really help identify that as well, to cause a potential resistance or support just as much as our horizontals or even pivots. I know some people will throw Fibonacci lines or pivots, things of that nature that will show or identify as a way of causing that support or resistance. So with that being said, I'll go back to my one chart here so you guys can see it. But we're trading the noise, okay? We're finding the moment of where the stock decides to hit based on that support or that resistance. So with that being said, you got some bounce here, many bounces here. I'm always looking for those breaks, okay? And it could just be a moment of time, and we'll play those high risk, option plays. And what I mean by high risk for this week would be obviously, expiration of August 28th. That's literally Friday. You don't got much time. And that intrinsic value is very, very volatile when it comes to playing with some of these options. So I'm looking for highs to break. Okay. I love strength. I hate buying dips, but I'll mind the dips because I know that the chart has, respected that period of support, 3 times here in the past. So if it comes down and I want to be that first guy to buy the options here at the very dippy area of the stock, it can be dangerous because sometimes the stocks will just roll on through that and find the next lowest support. And there you're sitting with a 50% plus loss on an option, and you don't know what to do. So I like to teach my students, it's very important to have a proper trade planning, proper risk management. You want to be very careful of how you're analyzing that chart. Don't jump into it, especially if you're brand new guys. Play one contract at a time. And I like to say, get to something that's far out expiration, but near the money if you're brand new to it. And start, dabbling with it a little bit. It's very, you gotta get your feet wet, so to speak. So with that being said, I'm looking for strong movements. Today was not really a day on Tesla that I traded at all, but if I did, I'm looking for these highs to get popped. Okay. And when we have that moment, like this candle right here, we popped it. I could have probably made a quick $1 per contract, maybe right there, which would have been decent money, just depending on the contract that I would have grabbed, but it wouldn't have been really that great. So really the moves that you want to look for are something obviously with good movement. I'll show you something like Facebook. Yeah, Facebook was astronomical today. So with this being said, this is a 2-minute candle on Facebook. I'll go back to a daily chart. And what I love about the daily chart is I'm looking for those breaks. You guys see this right here. We had a resistance of 278.87 on Tesla or Facebook here. like I said, this had a moment of consolidation as well, and it broke the 268, which automatically got me interested on the stock. We're showing strength. We're showing buying powers coming back in here. I hate to trade something weak. Don't pay attention to it if it's something weak and you're trying to play bullish on a stock that's just not ready to be bullish. So it takes a lot of patience, a lot of discipline. Sit on your hands, wait for that moment. And as you guys know, I day trade most of the time. It's pretty rare I'll swing some of these unless I see that moment. Like Facebook, I'm swinging this because we broke our previous high today. This is our 52-week all-time high. We broke it today. We closed above it today. So that gives me good positive evidence that, okay, well, we're probably going to see some upward strength tomorrow due to the fact that we've got some good volume up here. Things are increasing. I want to see above average volume, which will be that blue line. But it shows that volume is increasing. Things are showing strong demand. We've closed above our previous highs, and we're ready to continue pushing and break out of that channel. But anyway, this is today's candle. You see how we, open and closed way up here. This was where our opening. This was our closing price right here of that candle. We obviously saw higher than high movement and lower than low movement. But like I said, going back to a 2-minute candle or even a 5-minute, 2-minute may be, heart attack for some people because it moves pretty fast. That 2 minutes is representing 2 minutes of time on that one candle. But just in an instance, you could do 5, it'd give you a little slower pace. I never touch 1 minute, but we got 2-minute right here. And in this sense right here, this was, let's see, the start of our day was right here. So we started literally right, let's see what candle, this one right here. So we literally were gapped up this morning on Facebook. So this was our opening price. This was the closing price. We filled that gap. And I like to wait for the gaps to fill. Obviously, when you have the chart opening up and it's a gap up, I don't jump in right away and think, oh boy, this is gapping up. This means slap the ass. Let's roll in it. Let's move. This thing's going to make me all kinds of money as soon as I slap it. No, you got to be patient on those gaps, especially any stock that's gapped up. I wait at least the first couple candles to show me that the stock is wanting to maybe come and fill that gap. And sometimes, they don't fill their gaps depending on how far they open up beyond the point. It may take their time and then fill its gap, 2 o'clock in the afternoon instead of, the first 30 minutes of the morning or something. So with that being said, Facebook struggled for this little first period of time right here, but it was showing me that buyers kept stepping in, volume kept outbeating the selling volume down here. And it showed that it was holding strength. Something was about to pop, and it was giving me some good strength. Obviously, this white line right here is the daily resistance. We broke through it and we hugged it as this way of support here many times, but we finally decided to give way from it and go to the next stage, which was up here later in the day. That was what, about 10:30, 10:45, I think. That was 11 o'clock, 10:50. So it decided to take off right there. But with that being said, I waited for this gap to fill. The gap did fill, and then their next candle started showing up. This was literally my entry point, was right here, based in this little section of time right there. It broke our opening high. That was where we gapped up. We filled the gap right there. The candle flushed down here. It decided to push back up. Volume was kind of stair-stepping its way back in and showing that the strength was going to outweigh the selling. Obviously, we got engulfing bullish there and then engulfing bearish there to kind of, give it back to the bulls like, hey, you ain't going to take us up. But with that being said, the volume really outweighed what was trying to be taken out right there. So this was literally your entry, was on this candle right here, this guy. So showing that it was not going to close down and continue downward, but actually push up. Took a little bit of time, but as the day rolled on, like I said, about 11 o'clock was really where we broke out, okay? I had high hopes of this because, like I said, as a whole, this entire frame of mind is showing that we've got strength to break our previous candle. So going back to the daily, I like to look at multiple time frames. And what's nice about TrendSpider here, you can throw up those, those double charts if you want to, and see the daily candle at the same time that you're judging on the 2-minute. So throwing up a 2-minute candle here on the right, this candle right here, that 270.87, I already knew that price in my mind of what I wanted to see pop. So showing that we had strength up there, I knew that our yesterday's, resistance was going to be up here. So with that being said, I'm looking for that price to finally pop. 274 is down here. This was our 273.90. This was a resistance from this point here. from this day back in, what was it, August 5th or something like that, I think. Yeah, no, August 10th. So we had a resistance right there at 273.90. It's already pinpointed on the chart, easy to see. So in that sense, we got past that point, this 273.90, that first white line, like I was showing you guys, and we finally broke up, and we're going to shove our way to that 278.87, which was this all-time high, which was literally the 52-week high. We shoved it beyond it there. I'm going to go back to one chart so you guys can see it a little bit easier here. So we broke past that all-time high, this white line right here, and showed up here to an all-time new high. So just playing that momentum, that you got strong volume shoving between it. I'll scalp these options. Now, sometimes I may hold the option through the whole process. Like I said, I don't like to just show you, just say, yeah, hold it and hope it's going to keep going and going and going. There's going to be a limitation to this stuff sometime, okay? It's not just going to keep going forever. But I like to get myself a good nest egg of options when I feel confident that the stock is going to push all-time highs. It's going to break these barriers, and when it does break, like I said, you got to milk your winners. Obviously, if it's going to come crashing down and not prove it to move that day, and you got a near expiration option that's going to lose you a lot of money, kill the loser. Okay, don't sit on it and hope that it's going to do it. You got to see volume and momentum. I watch level 2 like a hawk too. And level 2 is showing me bids and sales and times and sales to show me that the strength is pushing with the chart. But with that being said, we'll come up here, we'll break it. And I'm always looking for the new highs, new highs, new highs, new highs. And as long as I'm confident, as long as my entry is down here, I'm pretty early on my entry, I'm looking for these highs to break. So we may consolidate for a period and then shoot back up and then double top. You kind of got a double top area right there. It pulls up, but as long as it shows a higher low, I'm confident in the stock. I mean, obviously, if it's going to come down here and break this low, I'll be like, okay, it's time to get out. I made a good trade. I don't need to be holding it this long. So in that sense, higher low gives me strength that this is going to continue. The momentum is rolling, it's showing it, and then I can start drawing my trend lines, okay? And you've got this 2-minute trend line right here that's drawn up here. And, I'm showing 2 points of contact. I've got this point of contacts down here and right here. I could even draw another one right there to really give me some sign. But I've got 3 points of contract, and it gives me that point that, okay, we're following this channel. Okay. This is road mapping my stock to some new highs. It's giving me some strength to show up there higher and higher. So when it finally gets to that peak, and I'm starting to see a lot of little short candles, okay, especially these little short candles that come up with another big push and they top out, it gets me a little concerned that, okay, I better start taking profits. Obviously, when we start breaking our downtrend in this 282.06 area, showing that that was a previous high, it was a high right there, and it's got to be a support, and we kind of cracked on through it. I got out, okay, made good money. The options on Facebook today made well over 200%. And the options that I played today were the 280 calls that expire on Friday. They're high risk, but we got well above the money. I think some of the guys even played 275 calls. So even the 300s, I think, were really moving pretty good today. But with that being said, we closed up here. The daily candle was really strong. I love the movement on Facebook here, and we may continue to see much higher because we've closed literally above our all-time highs. You got strength that shows that selling is not in control, buying is. So with that being said, I love to play those kind of channels and trade it out. It just gives me my roadmap to success, as you will. But anyway, guys, as far as indicators too, as far as when I throw up an indicator, I'll throw up one here just to show you guys that if you guys can't hold through this stuff, that I'll show some of the students sometimes is acting 2 EMAs. Okay. So exponential moving averages, I'll add 2 of them up there, and one is going to be an 8 and one of them is going to be a 5. I know these are different numbers than some people use, but I'll go ahead and show you here just as an example. Okay. So adding these to the chart, I show you right here. I'm going to go ahead and clean up the chart here, remove all the rays. I can go back and rechart this. But what it's going to show you here, guys, is when they cross, it gives you buy or sell signal. Okay, it's kind of an interesting concept here, but I'll go ahead and show you just an example here. So zooming here on the chart, I see that, you're watching this yellow line, the red line and the yellow line. The red line, let's see, what did I have the yellow line as? Okay, the 5. The 5 is faster moving than the 8. So I'm looking for these lines to cross. We see it cross right there. This shows buy, okay? The moment that yellow line crosses the red one, it shows buy. Now you're watching them get close together and you see zero touching, okay? They're not touching each other. When it gets to this point, they cross again. That shows you, okay, it's time to sell. Okay, so that made us scout. If you would have bought the trade from this point to that point, you probably would have made some decent money on the option according to however you played that, just based off that indicator, okay? I don't like to play indicators much, but it can be helpful for some people that are just new to not being able to read the candles, because these candles, guys, they tell you a huge story of how the stock is rolling and how, signals are showing selling or buying pressure depending on how the wicks and the bodies of these candles open and close. But that's another topic for another day. So we got our open right here. They cross right here showing, okay, it's time to buy. And you see they don't touch until they cross right there. So it's time to sell. Right there's another clean trade. Okay, so sit on your hands, guys. You guys can use this indicator for yourself if you want to. But it's shown you many, many times. I'll even throw this up on Tesla just to give you an example on a daily chart. I know it's kind of wild pulling up Tesla, and it shows that the 5 and 8 didn't cross to like 300 or something like that. I think it was down here. Yeah, entry on the 8 and 5 EMA. I've got it marked here where I was showing somebody earlier. But as you see right here, this was at what, 400, 500 bucks, 497. They crossed. The 8 and 5 crossed right here. And as I go through this daily chart, I never seen, whoops, I moved my thing there. I never see them cross. Okay, we got close right there. They touched, but we got no cross. And we're climbing, and it didn't give me no sell signal till right here where they just crossed. Okay, and what price is that? That's all the way up here at 1,500 bucks. Okay, so that's literally a $1,000 per share gain had someone just bought off the indicator showing that entry of 8 and 5 crossing down here on the daily. You can use this 5 and 8 EMA just as well as on a 2-minute for scalping or for daily charts. You guys want to play that system and go that route. I've learned to just judge it off the candles because, guys, I don't sit on stuff for months on end. If I see a breakout starting to push through and starting to climb and break these, the previous daily candles or, daily candles that have broken from the previous highs here, like this, for this instance here, I love to buy strength. It's quick, easy money. It's very, momentum driven, and that's kind of what I go for. Anyway, guys, that's all I have for y'all. If you guys are interested in what I do, you guys can follow me here on Twitter. My page is right here, Magic Mike Trader. You guys can give me a follow. I'm always on interactive with my guys. I'm always posting charts for earnings report plays, stuff that you guys may be interested on stocks, even some alerts sometimes. So if you guys want to follow me there, feel free to do so. We got a Discord channel, and I actually live stream with everybody every day on trading. So you guys can check our website at magictickerstrading.com. You can check out the live chat room. I even offer classes. The classes are actually coming up here on September 20th through the December 18th. So this is a 3-month course of teaching guys everything to do with understanding charts, fundamentals. It gets a breakdown of everything in there, and you guys can, check it out, see if it's something that would work for you. Like I said, I'm here to help you guys try to make money in this market. It's been the craziest market in my lifetime, being in 2020, but it's been the best volatile thing that I've ever dealt with. But anyway, guys, check that stuff out. I've even got some free videos here on my YouTube channel, and you guys can follow me from there. But anyway, hope that helps, and thank you, guys.
Thank you, Mike, for that presentation. Really appreciate all your insights using the platform. Now let's move back to the crypto side with Val, aka ValCoins. And I like to call her the queen of seasonality because she has been just on top of it with our seasonal trend feature. And let's learn more about that and how she scans the crypto market to find her next trade.
Hello, my name is Valentina. I go by ValCoins on Twitter, and I'm very happy to be here with you today. I will show you how I use TrendSpider to find my perfect entries and how I find it useful in general. And I hope by sharing my insights, you will be able to use it with much more ease, and maybe, I don't know, find a strategy or try to adjust mine. So first of all, as you can see, regardless of the coin I'm charting or of the asset I am trading, I like to keep my screen divided in 4 because I always want to see the monthly chart. So what is the direction, the micro direction of the market? Obviously, then I would like to go and see how the weekly looks, the daily, and the low time frames to find, the entries with the best risk reward. Basically, of course, nobody will start by trading off the monthly chart. So yes, the basic chart is the daily and the weekly. But having these 4 screens, always opened up, I feel it keeps you from making mistakes or maybe sometimes rushing into a trade and forgetting about what the medium term, direction is. Okay. So I know everybody that usually follows me trades mostly crypto. I also trade other assets. My favorites are gold, silver, oil, and currencies. But yes, crypto, keeps the main part of my time. So if we'd go to Bitcoin, for example, I don't use a lot of indicators when I trade or when I chart. I mostly focus on price action, and I don't rush into trades. So besides the fact that I use the indicators to mostly confirm maybe my already, how should I say it, sketched out path that I have, I don't rely on them too much. One thing that I love about TrendSpider is, and my favorite, is obviously the automated trends. Okay, so what this does, it would draw the trend lines automatically for you, and you don't have to struggle and find those trend lines correctly and wonder if you connected the right low with the right low, or if it's maybe another low, etc. The beauty about this actually is that the computer draws it for you. You don't have to question yourself. And I feel it would make things much easier at maybe cutting losers faster, because it is obvious once the trend line broke down, your position is in danger if you are in the long, and once the trend line broke upwards, your short is in danger if you are shorting. In other words, first of all, refresh and lock your trend lines, obviously. So first of all, it would help you cut out the noise. What is the noise? It is all that crazy price action that is happening during the day and where the spot where people usually get, liquidated or get out of the trade too early, etc. I mainly, personally, mostly swing trade. That means I take rarely short terms. It is more medium terms positions. Yes, a swing trade can go up to maybe, I don't know, 2-3 months. Obviously, that would be a swing trade on spot. My longest swing trade on spot was around 6 months. It was on Bitcoin. Okay, so how, for example, I use the trend lines to enter a trade, or at least to plan for one. We would take the weekly chart and check out, what your direction is. Here it was obvious Bitcoin broke out, and I, for example, did not take any shorts here or plan to take them after this consolidation. My idea is not to discuss about an immediate trade right now. My idea is to show you how to use it on different time frames to spot, an entry for yourself. If you like to use Fibonacci, then there you also have the auto fib integrated, which is a great feature. Obviously, I like it for a lot of reasons. If we go, for example, here on this chart, it is clear and it has nice levels. It's already showing you that, you know, what is going on short time frames. So you can maybe spot your short entries or your long entries or your invalidation points. Besides AutoFib and trends, obviously you have a lot of indicators. All of them are great, but I will move to them a little bit later. I would first like to talk about patterns and people that like using patterns. I, for example, love combining the patterns with the trend lines, with the general trend, and so on. MACD crosses even, yeah, sure, that goes from indicators. So how patterns help you? Well, if you are familiar with candlesticks, then you usually would use something like this. A strong bullish sign would be maybe, I don't know, a dragonfly doji, a hammer, a bullish engulfing. Obviously, that is the strongest you can get, a combination of those. The idea is that by clicking on patterns, you can select any kind of pattern that you are familiar with. Obviously, I would not recommend anyone to start using patterns or different concepts they don't understand. First of all, of course, you need to get familiar with what we are talking about. And after that, you can apply that. The idea is that TrendSpider, it finds them automatically. You don't need to look for them or, you know, scan for them. It can even notify you by an alert that you can create that, you know, that pattern just occurred. So if we, for today, for example, we'll end up having a bullish engulfing candle, and this is what is to your interest, or this is what you are looking for, then you would set, you know, alert me when a bullish engulfing candle occurs and notify me via SMS or email. They have this awesome feature. It is extremely useful. So we will say like engulfing. Okay, my typing today. So let's say, you know, engulfing. Okay, we'd apply this. So it would show you, obviously here we have bearish engulfing, but this is short term. Let's move to higher time frames. For example, on weekly, obviously it is hard to take, you know, position, a short-term position based on the weekly chart, but a medium-term swing, it is very nice to take one based on the weekly chart as well. So obviously, you know, we had this resistance here at 9K. This is a combination of factors that I call, you know, a nice confluence that would probably have convinced, you know, a lot of traders to enter position here. So we had this obvious resistance here, and the TrendSpider spotted this beautiful bullish engulfing, right? And if you would set the alert, it would have notified you. You wouldn't have time, you wouldn't have to spend time looking for it or doubting it, and you could have taken a trade, you know, with an easy validation. Obviously, it is below this low here, your stop loss, you know, with the entry here, and what a beautiful run it had afterwards. So basically, you would create the alert. You would go to create alert here, indicator or trend line or multi-factors, so on. You can choose from the list, and this is how it would proceed. So, for example, we'll look for something else. You know, Bitcoin might not be the only one we should look at. Let's say, you know, a hammer. A hammer obviously also would have given you even a nicer entry than the engulfing, but you would have had, this is what I'm looking for in the chart. Again, for confluence of factors that would confirm my already somehow pre-planned idea, right? So I'm looking for these factors to align. And once my idea is supported by the price action, I execute and enter the trade. So here we had a very beautiful bullish engulfing, right? Obviously, this series of hammers on daily, this is the weekly, this is the daily chart, that made me enter along at 9K region. The same goes for the shorts, and it is obvious a lot of bearish engulfing were spotted here. You know, this big pin bar. Of course, I use a lot of candlestick analysis, as in they tell me about the buyers or the sellers' intent. By using that, I try to understand what the market is trying to do. Does it have more room to rally? Did it come to an end? There is no such thing as trading without any kind of failure. That is impossible. There will always be stop losses. There will always be some kind of losses. I focus on keeping them, you know, as small, let's say, as possible, obviously, and as quantitative small as possible. So as in, I would, if I get stopped out 2 or 3 times from a trade, it is obvious that I'm not getting the direction clear of the trend. And this is when I would recommend everybody to step out a little bit and let the price action develop. In my opinion, most, you know, a lot of traders, let's say, or many traders, they lose most of their money while playing in the range. This is where I see the killer of the traders, the range. Because once you get a clear trend direction, eventually, you know, even if it's not from the first go, but eventually you'll adapt to the trend. But if you have a long boring range like we have here, for example, you know, on the daily chart is a very wide range with, you know, deviations here to the top, and it didn't get to clear the lows, and it just, you know, kept to the buyers and the sellers here, you know, in a little fight right at the mid of the range, you know, and then it eventually moved up. Yes, but this is where I think most traders get chopped out. And in that case, if you notice it is a range, it is not that complicated to see that you are in the range with the price, because obviously it is not making newer highs or new lows, but it is stuck, you know, it is moving up and down, and maybe your stop just got hit for a long that you tried, and then a stop for a short got hit. Obviously, these are the first signs of the ranging. Okay, so in my opinion, in general, it would be best to stay out of the range and let it clear itself. Yes, I know most of the time markets are ranging. It is basically, I don't know, 70% to 60% of the time markets are ranging. Yes, that is correct. That is why probably 70% of the time, you know, traders lose money instead of making money. So maybe it would be a good idea to stay out those 70% of the time instead of trying to milk, you know, metaphorically speaking, every single move. Just, you know, stay out of that region and enter once you can clearly see there is a price direction. So the trend resumed or it, you know, changed. It doesn't matter. So what I'm trying to say is that on the daily chart, TrendSpider would have alerted you if you use patterns, or if you add to them even trends. Other people prefer Bollinger Bands. Yes, you can use Bollinger Bands as well. Trading in confluence with moving averages is awesome. Of course, again, no kind of technique is unbeatable. They will all have small failures, you know, here and there, but you need to focus on what works best for you most of the time. It is not all the time, it is most of the time. Okay, so you would have had a lot of chances only by simply using the trend lines and the patterns. These are just 2 simples I picked out. It's like the hammer and the bullish engulfing. You can also see the bearish engulfing and a spinning top here. Let's say, I don't know, we don't have a shooting star, which would have been an inverted hammer. I don't see one here, but you would have had plenty of opportunities to enter. This hammer here, I liked a lot, because if you see the confluence of factors and you don't have to do anything, TrendSpider already did all that for you. It is showing you a hammer that is bouncing off the trend line that has been already automatically drawn. You know, a hammer here, a bullish engulfing here, another hammer, all these little candles that is showing you that price will come to a resolution soon, and this supportive trend line, and then the price expansion. You don't need to keep all the trend lines on the chart all the time. By clicking right, you know, you can remove a trend line or lock a trend line, you know. So this is the lock trend line. That means that you know, while I remove other trend lines, this one will remain on the chart on all time frames. Yes, so this is our locked trend line here. If you can see it, this trend line that supported this first move on BTC before we enter this consolidation here. So this is it, and it looks beautiful, and it is showing you beautiful bounces. It's just awesome to play it, in my opinion. So again, you can take them out if you want to see a clearer picture. So all trends are gone, trend lines are gone, and only this locked trend line stayed, because let's say this is the only one that is interesting me at this point. And besides that, I like to check the seasonality, which is a pretty new feature here on TrendSpider, but I find it awesome. Okay, don't check the seasonality on BitMEX for Bitcoin, because it has exchanges with much bigger history elsewhere. If we go to BTC USD, let's say Bitstamp, for example, you know, it's an older exchange with more history. And the more history we have, the idea is that the more accuracy you get. Okay, so we would like to check the price. I usually go here and just pick the widest period of time. So I wanted to read it for as many years as possible. Basically, what is happening here, the software analyzes the price behavior, yes, the weekly price behavior through all these 9 years, and it is telling me right now during week we are here 35, in 44 you know, percent of cases of the weeks that we had, 35 weeks, which we had like 9 of them. So the price had a positive change only in 44% of the cases. That automatically means that in the rest of 56% of the cases, the price had a decline. So the 35th week of August usually is not the best week for a Bitcoin, let's say. This is what you can understand from this, right? And then you can go from week to week and only like scan visually, you know, like, okay, what was, you know, a good week, like in general, always. I don't know, this one is, you know, 100%. The 48th week of the year is like 100% positive all the time in 9 years. This is a blind long. This is how I call, you know, a blind long. You don't look, you just long. It's a joke. You have to look all the time. But, you know, you can use the seasonality to confirm. Again, I don't use any kind of factors alone. Maybe only like support and resistances flips and the trend lines. Yes, I could use only these 2 features to that would make me that would determine me to enter or to not enter a trade. Okay, but a seasonality I check to understand, you know, how price behave, because this is basically statistics. So statistics, most of the times, they are very accurate. This is how I see things. And it is another great feature that I did not find anywhere else besides TrendSpider, that is easy to use, that it has it on every single coin that I looked at. And it gave me positive results. So I never had a false positive, let's say, you know, until now. So the statistics would say, you know, it would go up and it went down. it didn't happen until now to me. Obviously, yes, there can be, you can't have a 100 repetitive behavior, because in that case, let's say everybody would be trading only the same. So you can't have repetitive behavior in 100% of the cases, but usually, you know, it's pretty repetitive. So another thing that I use, and I want to talk about real fast about that before I wrap it up, it is that you can create your own lists. I created my own lists separate. I like to have things organized and separate. So I have created my list of coins I trade on Bitfinex, on what I trade on BitMEX, on what I trade on Binance USDT pairs, and on what I trade on Binance BTC pairs. Then you can see I have my currencies here. As I said, I enjoy trading currencies. And of course, the commodities. It is not very complicated to create or edit a list, and it is very handy. So you would scan pretty easy. For example, you know, let's take the patterns off. Let's put the trends on, and you want to scan. Obviously, you can choose to use the market scanner, and you can choose all different conditions there. I think anything you can think about is there, from the golden cross to the bear cross, you know, on moving averages, on simple moving averages, the classic one, 50 with 200, then the MACD cross, anything, I don't know, RSI ticking up, RSI ticking down. It is a very wide variety of market scanners. What it would do, you know, you apply that market scanner. Let's say, you know, we'll go with currencies. So I'll show you an example real fast. So in my list, I select, you know, currencies here. Let's say I want to scan for what I want to scan, something, you know, a bull cross. Let's say I want bullish, recent MACD bull cross. Let's see what happens, you know. So any of the following, because if you select all of the following, that it needs to meet all of the criteria. If it's any of the following, so any criteria, you know, it meets from here, it's fine, you know, show it to me. So again, currencies, the recent MACD bull cross, let's say there is something, I don't know, we will see. So it's scanning, there is nothing. You know, let's put the current, okay, that's daily. Let's put any of the following. So I'll put 4 hours, I'll leave daily, and I'll put weekly. You know, as I'm a swing trader, obviously I'm interested in higher time frames. Okay, there is nothing again. Okay, that didn't work too well with the currencies. Nothing is moving up, or everything is too high already. But the idea is you would click on scanner. Let me show you, for example, on Binance BTC pairs, maybe it would work faster. We'll find something. So we want recent MACD bull cross. I will click on scan. It is scanning. Oops, and voila, it, you know, it found 6 coins that you have, and you can go through. So we'll skip the manual trade. Let's say it's scanned. It's showing me, obviously, that this just had the MACD bull cross, so I'm interested in checking them out. So then what do I see? On short term, it is showing me that, you know, GBT is standing there. Well, what I can see is like breaking out right now, for example. So obviously I'm interested in this coin. Obviously at this point, I'm watching what it did. So I can see a clear trade here, breakout. It is not very strong yet. I would look at the daily. The daily is also trying to break out here. Yes. So you can do it like that. You can either take a bigger risk and enter now and put your stop loss somewhere, you know, here. I don't keep mine very tight. Or what I would do otherwise is wait for the breakout to confirm, actually. So the price to break out first and come to revisit, confirm as support. And this is where I enter with pretty much the same stop loss. So guys, this is only a small part of how I use TrendSpider. It has a lot of feature, and I don't have enough time to show them all. They are all unique, and it is possible to adjust them and adapt them basically to all the needs. As I said, you can look at anything from crypto to traditional markets, currencies. It can help you in a lot of ways. It can help you not get stuck. You just need to, to exercise a little bit, to understand that once a trend line is broken, that can be a warning sign, at least. This is how I see things. Or it can confirm your bias, and it can also show you what you're not seeing with the naked eye. Obviously, I would have seen with my naked eye this trend line so fast. And it already gave me the MACD cross. It is beautiful. Same things goes for Kava. Okay, here we have something different. Even though we have a recent MACD bull cross, this coin is not looking too hot, and it is sitting on breaking on short term the trend line. Yes, okay, then we would check the daily chart, and we see that it is not looking very well. Yes, it could be a support resistance flip going, as long as we keep this region here. Yes, but it could also be a failed breakout. So it will not manage to hold it, and it can fall down. So this is why I said trend lines. My favorite thing is the trend lines, the patterns, the indicators, the alerts that you can set, the scanner. I have a lot of favorite things. So out of everything I have told you so far, I hope you find what is of most interest to you, and I hope you come to use it to the most. I personally recommend you to use the platform without hesitation, as I have tested it for multiple months, and I simply love it. If you are interested in seeing my analysis, I also post very often about different markets, from cryptocurrency to traditional markets. You can check me out on Twitter. I go by ValCoins, and I have my trading website. I also have a group where I post trades for my members, and they're very happy with the results so far. You can also check it out on ValCoins-trading.com. Besides that, I hope maybe we talk again, and I'll explain more features of TrendSpider. And I'm wishing everyone a beautiful day, and enjoy.
A big thank you to Val for going over crypto and how she uses TrendSpider to not only look at seasonal trends, but also scan her next trade. So let's go on to Bob Desmond, who really uses the platform in a very unique way, not only in the Bollinger Band side of things, but the alerts as well, and how he really uses the alerts to stick to his plan. So let's move on to Bob and see what he's got to say about that.
Hey, thanks, Jake. And folks, my name is Bob Desmond, and thanks for joining us. And I am the CEO and founder of The Contrarian Trader. I founded The Contrarian Trader back in 2005. You can find us at thecontrariantrader.com. And we're on YouTube, Twitter. I want to first talk to you about me, my trading experience. I've been trading for about 30 years. I'm a technical trader, but I focus a little bit more differently than a lot of other technical traders, in that I like to focus as well on macroeconomics. That includes politics, geopolitical events, and things like that. I'm a nerd, okay? So that's what kind of sets me a bit apart from the competition. That's my edge. And of course, I love the charts, and we use the charts as our timing mechanism to identify great risk-reward entry points, and when, of course, it is time to exit the field, either to book profits or to admit failure and to cut a loss, take a loss. So my gurus are the people I follow: Peter Schiff, Jim Rickards, Jim Rogers, to name a few. Those are my go-to people for whether or not I believe that my theory with regard to my geopolitical take on economics is a sound one, or whether or not I need to get righted a little bit. And the last time I was on with TrendSpider was with Dan back on February the 19th, I believe, the 13th actually. I'm sorry, the 13th. And back then, my position on the market was that we were at all-time highs. We had just made a new all-time high on, I believe it was a 12, and that I was turning bearish on the market. But longer term, I was bullish on the market because I believe that heading into the election, that the power of the presidency would allow the president to spike the market, which is what we're seeing now, and that hasn't changed any. And you can go check it out. It's on TrendSpider's YouTube channel. It's dated I believe the 19th of February. And it was only a few days thereafter where the markets broke to the downside. And my concern when I was pressed by Dan about, why was I bearish on the market while the markets were making new all-time highs, my concern was that we were extended technically, and that there was no concern whatsoever being given to the news that was just beginning to filter out. And this goes back to my geopolitical look at the market, that we had a supply chain shock coming down the pike and nobody seemed to care. And that was my edge over other traders. And I knew that at some point in time, the news was going to catch up to reality. And it was only a few days later, I believe the stock market did not make a new high until the 19th of February. Then on the 20th of February, we had what you call a breakout point failure, meaning we broke out on the 19th to new highs, but on the 20th, we failed. We could not hold that breakout. That was a short signal all day long, and there began the big sell-off into March, April. And going into that sell-off, we were short the Qs, we were short of Amazon, we were using put options on Amazon. We did very, very well. And while our longer-term core positions in the gold miners did suffer some, no doubt about it, they took it on the chin. Our bullish take on gold, silver, gold held up a lot better than the gold miners and silver, but all have since subsequently rallied back very, very strong. As you all know, gold is at all-time highs. The gold-silver ratio has narrowed quite a bit, and we took advantage of that big sell-off to go buying more gold miners, more silver shares, and that trade has played out fairly well. And we remain very bullish on let's call it the stagflation trade. And stagflation, for those people not familiar with it, that's a time period back in the 1970s where we had not quite hyperinflation, but quite a bit of inflation, yet growth, GDP, was flat to barely up. And that's not a good environment to be in for equities, but it's a great place to be in for commodities. And that's what we're very long of right now. And I believe that during this next run up, you're going to see the crypto stocks do fairly well as well, because I've done analysis on Bitcoin. And Bitcoin, when you overlay the CPI, which is the Consumer Price Index, versus Bitcoin, you'll note that they trade in tandem. So we are seeing inflation out there pick up. And I'm going to go over a few charts in a moment to support that opinion. And we are at current somewhat bearish on the speculative names out there. And I'm going to show you a scan I ran on TrendSpider in a moment that picked up a great short trade, Salesforce.com. They reported earnings last night, and today they just shot through the moon. I'm going to show you a scan that would have helped you pick up this short swing trade. I'm not betting that Salesforce.com is going to crash and go to zero. No, it's just overbought and ready for a pullback. And if it continues higher, I welcome that, because I will add more to that position, because I'll show you the chart in a moment. The uptrend on Salesforce.com is simply unsustainable. It will react to the downside fairly soon. I'm very confident in saying that. Longer term, again, stagflation is coming down the pike. I expect that we will continue to rally into election day. After election day, no matter who gets elected, I don't know what happens next. I'm not that smart. So we'll do a revisit, a pulse check of the markets after election day. We'll see whether or not we've had any type of a sizable correction. Has GDP picked up at all? Have the old stodgy names, the airlines, the cruise liners, have they begun to recover? If not, well, then we have a serious problem down the road. But let's talk about TrendSpider and how I'm using it both short term and longer term. First off, I want to go over a chart of CRM. And you'll see at CRM, Salesforce.com, of which I went short of today, being the 26th of August. And you can see on a daily basis, we are trading up and through the 3rd standard deviation Bollinger Band. I do not use a 2 standard deviation Bollinger Band. I modify it. I like a 3 standard deviation Bollinger Band. And for those not familiar with the statistical significance of changing that 3 standard deviation Bollinger Band, in short, you don't need to worry about it. We're not supposed to be here, right? The probabilities of us sustaining this trajectory are highly improbable. Now, going into earnings, the probability of a continuation move higher was very strong. That's all since changed. Now let's run a scan, and I'll show you how I picked this one up. So I want to go to Market Scanner, and I'm going to go down to Upper Bollinger Band Peers. I'm going to select that. S&P 500 is already populated, and I'm going to modify these Bollinger Bands. I'm going to go from, you can see I was already in here. It's already at 3 on this one. I'm going to go to 3 down. Apply. This I've already modified from 2 to 3. We're good to go. This is on a daily time frame. Let's run the scan. And this is going to bring up a few other trades that we're going to be looking to put on as well to the short side. Again, we're not betting that these stocks are going to crash. We are betting these are contrarian short-term swing trades. We're betting that there's a tremendous amount of froth in these names and that these names will soon correct and pull back. We will exit these trades. We are not looking to make home run gains on these trades. We're looking for doubles, singles, out. That's it. So that's what we're doing short term with our trading in this market environment where we have a very expensive market, one that is very extended on a technical basis. And today we saw I'll go to that in a moment, the VIX and the S&P 500 both traded up on the day. That is a very bearish signal for the market. I always like to say that the market sends you a signal, and that is a signal to get very, very cautious, which is why we began leaning into the short side today. Now you can see here, after running the scan, I've returned 1, 2, 3, 4, 5 names, CRM being one of them. And if you take a look at CRM, I like to do what you call multi-time frame analysis, meaning, and this is why I love TrendSpider. I like to take a look at the monthly charts to identify where a stock has been, to identify where it might be going. What's the trend? I may be a contrarian, but I don't fight the trend when it's not unsustainable, as I'm going to go over with CRM. So when you take a look at a monthly chart, we are trading up and above the 3rd standard deviation Bollinger Band on a monthly basis, on a weekly basis, and on a daily basis. Add to that, we closed out the day with RSI at 86.05. Now, that sounds like it's very, very high, and it is, especially for an S&P 500 name. But in this environment where you're in a parabolic blow off on many of these mega cap names, the RSI can go higher. So did I go jumping in with both feet with my intended allotment of shares to short CRM? No, I went in. I took a quarter of my position. If it pulls back, I make some money, great. If it goes up higher, I view that as an opportunity to build on my position. Now, it's not the best in a normal market to go averaging up on a short trade or averaging down on a long trade. It's different when you're trading unsustainable moves. And that's where my contrarian trader cap gets put on. This is my bread and butter, what we're doing right now. And I'll show you another chart that we traded. We booked profits on it yesterday, Best Buy stock. And Best Buy, which is also a Fortune 500 name, shot up and through RSI near 90 on the 24th. Earnings were set to be reported the following morning. Now, normally I don't like to be long of a stock into earnings, but when I'm looking at a stock or trading a stock that's at nosebleed unsustainable levels, I view that earnings report as an opportunity to take advantage of a catalyst that you'll get a sell the news event. And that's exactly what happened. We were only in this trade for a few hours, business hours, and we booked about 5 or 6% profit on it, and we exited in the pre-market, no less. So this is how we're trading short term. Longer term, I believe that what we're going to see is stagflation. We're already in that environment. Now, before I go on to my longer term prospects, I want to talk a little bit more about my short term bearishness, because I mentioned it earlier and I don't want to leave it unaddressed. And today, the S&P 500, will bring up the spiders. The S&P 500 closed up on the day and it knew all-time highs. There's only one problem. The VIX also closed up today. Not only did it close up on the day, it closed near the highs of the day and it flashed a bullish key reversal bar. It's a very bullish bar. Normally, you have an inverse correlation between the two. And when the S&P 500 rallies, when I pull up a chart of the VIX, I expect to see the VIX down. That wasn't the case today. And normally when you get that, it's a precursor. It's a warning. The market is sending you a signal that somebody is out there and they're buying insurance against the market while they're still holding on to their long positions, right? But they're buying insurance against a potential reaction to the downside because the market is expensive. It's a market that is being led by too few stocks. Market breadth is not wonderful. It began to widen out earlier in the week. That since ended. So this is our position short term. And by short term, as Dan would ask me to define, the last time I was on, I said 6 to 8 weeks. I'm going to narrow that down maybe to 3 to 4 weeks because we are going into a seasonally volatile time. So let's bring up, I've been using the seasonality feature here on TrendSpider, which is just simply outstanding. I'm so happy you guys incorporated it. Great functionality. This goes back 15 years. So we're looking at September, where we're up 67% of the time. So odds still favor bulls, but historically, it's a very volatile month. So while we may finish out the month up on the month, that doesn't mean that early on in the month, we're not going to get a pullback on the stock market. And I do believe that we are going to get that reaction. Longer term, how are we trading? Folks, we need to appreciate the fact that we have inflation. The government won't admit it, but they need it. They need it because our debt to GDP is the highest since World War II, and it took 30 years of inflation. This is why they want inflation. to work off that debt, because there's no way we are ever going to pay off that debt. And after the election, the president no longer has to worry about re-election. So the logic, the rationale to have the Federal Reserve to continue down this path of utter destruction it's unreasonable, it's unsound, it's unsustainable. So how do we take advantage of what we believe is going to happen? Let's take a look at what's working right now. And how do we know that there's inflation out there? And how are we going to profit? This is not doom and gloom. As Jim Cramer always likes to say, I rarely quote Jim Cramer because we rarely agree, but on this we can agree. There's always a bull market somewhere. And when you take a look at the tip market, this is the Treasury Inflation Protected Securities. Why would you buy Treasury Inflation Protected Securities, symbol TIP? You buy them because you're worried about inflation. Now, let's not worry about a daily chart. Don't even think about an intraday chart. Think macro, think high level. What have the tips been doing for over a year? They've been in a major bull run. But the Federal Reserve will tell you there's no inflation. Don't look here. There's no inflation, except for housing prices rose the most since 2006 this past week. Agriculture is breaking out. Take a look at the DBA. The DBA, this is the DB Agriculture Fund through Invesco, has been in a bear market for years. But what's it doing now? What's the story that agriculture is telling you? It stopped going down. The first thing I look for on a macro bet, a big long-term play, meaning agriculture's been in a bear market for quite some time. Now it's beginning to break out. I love these names. These are core positions I want to put on, I want to hold, because we know what's coming down the pike. The market's telling us there's inflation out there. So we broke out in July after a bottom in May of 2020. Now we have new higher lows. All we're waiting for now are higher highs. So how do I leverage TrendSpider to help me through this? How do I avoid getting whipsawed out of a position? I simply do this. As a trader, your own worst enemy, and this goes for me, I'm not pointing fingers at all, is you. And impulse buying is by far the worst thing that you could possibly do. This is why good traders go into the day with a game plan. I go into the week with a game plan. I do it every Saturday and I send it out to members. I'm not going to get into that right now. Let's talk about the DBA and how we're going to trade this. You can see I already have an alert set up. I was hoping for a pullback and a retest of the breakout point here. You can see my alert set. I didn't get that yet. So what's the next way to open a position at a good risk reward entry point without being impulsive, with using data, with using the power of TrendSpider to help you identify outstanding risk reward entry points? Simple. I'm going to modify my strategy. If the DBA pulls back and retests 1397, I'm a buyer. Not a big position, small opening position, because we're putting in higher lows. We're not breaking out yet to new higher highs. We want to build on strength. When we see higher highs get hit, that's validating that we're right in our decision to get long of that position. So we're very strategic. And we use the alert feature on TrendSpider. Folks, you have to set your alerts, set it and forget it. If the alert doesn't fire off, you're not supposed to be in the trade. Stick with your game plan. So the DBA, monthly support, hit. And this is a monthly chart. So I'm going to keep this alert alive for the next 30 days. That's good to go. But what if I'm wrong? What if it never pulls back and retests the support level? It's improbable, but suppose we get a surge in inflation and ag just goes through the roof. What do we do then? Easy. We create an alert at this upper band of resistance. I want to know when we break out and above resistance on the DBA monthly basis. And this trade speaks to, thank God there's spell check on this. This trade speaks to a long-term bet on agriculture. And what I think is going to happen here, we'll keep this active again for 30 days. What I think is going to happen here is that we'll break out above this upper band of resistance. Then we're going to drop back down and we're going to retest the support level. That's what I think is going to happen. Could be wrong. We could fade, retest next month. Seasonality for the DBA. If you're wondering why am I just not in it now on the breakout from back here in July, easy. Seasonality is not wonderful this time of year. When is it wonderful? Look over here at your seasonality chart. This goes back 14 years on the DBA. This is invaluable data. Invaluable. Seasonality, 69% of the time, the DBA is up in the month of October. So I'm hoping for a pullback in September so that I'm long in October, if that makes sense. This is, technology makes you smart. This is an extension of your own intuition as a trader. These tools are invaluable. And I would strongly encourage that anyone watching this, if you do not have TrendSpider right now, you're missing out. You're missing an arrow in your quiver that should be there. And you're playing against the big guys out there. And more investors at your level are using this data every single day. And so the more time you don't have it, you're falling back behind your competition. So strongly recommend it. What else are we looking at here? We are looking at gold. We've been bullish on gold for a long time now. Now, we went bullish on gold back here. It was actually 20, I have a block on here, 2015, Q4 2015, right down in here. And then ultra bullish on this breakout in January of 2019. So we began building a position in the gold miners. We waited for the breakout, pulled back, retested. We were buying the last time I was on back in February of this year. We were very long of the gold mining stocks. Not so much silver, but we bought silver on the pullback during the sell-off in, I believe it was March, and then we sold it only a couple of weeks ago. We made a very nice profit. What else are we looking at? The GDXJ. These are the junior miners. I would strongly encourage you to not trade the leveraged ETFs. Trade, this is the VanEck GDXJ, or just trade the GDX, which is less volatile. You can see that we're down on the month. However, when you take a look at today's price action, a beautiful reversal on the day, closing just off the highs of the day. We're going to probably retest within this wedge formation. So what I want to do here, because I want to add more, I want to build now, because we booked profits back here when it became overbought. So now we've begun buying back. We bought a little bit more earlier in the week. We've broken out today. We've just validated that our thesis is accurate. Now what we want to do is not chase it. We want to see it pull back, and we want to see it retest support. And I want to be a buyer at that price point. And if it fails, well, then we don't buy. We wait for it to come to us. Okay. We're going to keep this active only for a few days. I think this is going to happen very shortly, if not tomorrow. So we want to add more on a pullback and a retest of support. So what was resistance should now act as support. That's the theory. We're sticking to it. GDXJ, very bullish into the new year. We believe that yields are going to rise. They have been rising. I believe that ultimately that while that's not a great thing for commodities, I think that we're so far in debt and that inflation was so behind the curve on, we're going to go back to the 1970s style of rising interest rates and rising commodity prices to keep up with inflation. It is inflation, meaning the Federal Reserve is behind the curve in their fight of inflation. That's why you saw bonds decline today, yields rise. What happened with gold? It rose. The market's sending us signals, and we only have ourselves to blame by not doing the homework and using the tools at our disposal, whether it be seasonality. And I'm going to show you a seasonality play I'm going to trade, and I'm not sure how much time we have left here, but I want to go over Boeing. And we've done a lot of conversation about Boeing with members and viewers of late. In fact, I updated this chart this morning. And while this is a ugly chart, you can see I have an alert set down here. I don't sit at my computer all day long looking for Boeing to come to me. The technology, TrendSpider is going to tell me when it's at my price point. Then I'll revisit it. Set it and forget it. Let the computer do the work for you. So I'm looking for Boeing to come back down and retest my support level, or I'm looking for it to break out. Now, why am I optimistic about Boeing with a chart that looks this poor and you have this huge 2 volume shelves above? I'm optimistic because of seasonality. Now, what do I mean by that? Take note of seasonality here on Boeing. You can see I have seasonality for Boeing going back 15 years. That's a lot of data. And what the data is telling us is that 80% of the times, think about that, over the past 15 years, Boeing is up 80% of the times in the month of September, while August, it's up only 33% of the times. Huge opportunity here, but we need to call the entry point right. That doesn't mean we can't head lower before we begin to head up higher. This is why I'm watching Boeing so closely. I'm looking for a sell-off here. We just had durable goods orders released today. What many people didn't notice about that report is that what drove durable goods orders so strong, and this is how you integrate economics into your technical analysis. What people didn't realize, unless they dug down into the data, a lot of what drove the very, very strong durable goods data was military spending. Fighter jets, drones. Who makes fighter jets and drones? Boeing. So this is where our head is at when it comes down to Boeing. Now, keep in mind, you have a lot of resistance above here, right? So if in fact we do manage to go closing above this resistance level, we can't go jumping in with both feet, right? I want to see a pullback to the support level, nibble, maybe a little bit more aggressively on a pullback. Then on a breakout, I want to nibble a little bit more. Then I want to pull back. Forget the daily chart. I want to go to a weekly chart. Because once we break out and above, I want to round this up to 190 per share on Boeing. Folks, this is going to be a great, great rally. So I want to set this. I want to get alerted very quickly. Boeing. Dan and Jake speak often about the volume by price. This is an invaluable tool that people don't use enough. It's incredibly important because you're not looking at volume on a daily basis or a weekly basis. You're looking at it at a price basis. It's so invaluable, that information. So our game plan has been formulated here with Boeing. Let's run through it really quick. Hopefully we have the time. With Boeing, tomorrow morning, I have zero intention of waking up, despite the fact that seasonality for the month of September is spectacular. We know that. It's got to come to us. It either needs to pull back to our support level and bounce, and/or it needs to rally up and through this resistance level here at around 180 per share. We want to stay small because we know we have a lot of overhead supply above. So what we want to do is, again, pull back to that weekly chart, because we know that if we close above 190 per share, look at all the volume shelves above between, let's call it 220 per share. Very muted. So I believe that we're going to see a surge in Boeing shares going into mid to late September. And once we break above 234.46 on Boeing, that means we would have broken through the pivot point. I'll explain to you what that is in a moment. Okay, so we're going to keep this active. We're going to go out 30 days here. So to illustrate better, we're going to use the monthly chart as a smoothing mechanism. We have seen a bottom. Ideally, we've seen a bottom on Boeing. We've rallied up to a high of 224.46. We're now pulling back. What we're looking for here, as noted by this lower band of support, is we're looking for a higher low. Now, if we get that, and we'll know whether when we have that, when we begin to put in higher highs, once we get up and above 234 per share, these shares are going to rip because that represents the pivot point. So very bullish on Boeing, longer term, short term, still very cautious on it. I think there is a trade to be had here. Seasonality is looking wonderful, definitely in our corner going to September. That's my take on Boeing. This is just an example of what we do at the Contrarian Trader. This is our style. It's a mixture of macroeconomics mixed with technical analysis, and we use TrendSpider. This is what we use. It helps protect us from us by using the alerts and by using the automated technical analysis. And I haven't even gone into the automated trend lines. I call this my spell check. I think I stole that from somebody. It may have been Jake. So pardon me. I'll give him credit if it was him. But I use it as my spell check for technical analysis. And that's all from me, folks. I hope you got some value out of this session with me. I want to thank you for sticking around this long. And please join me over at the Contrarian Trader. I can be found on Twitter at Contrarian Trade. On my YouTube channel, just type in the Contrarian Trader. You can go to thecontrariantrader.com. I have a 14-day free trial offer. I believe so wholeheartedly in TrendSpider. It's included with my silver and gold level memberships. It's part of my business. That's how much I believe in it. So again, if you don't have TrendSpider, you're missing an arrow in your quiver, and you need to have that because we're in such a difficult business, and you need every bit of an edge over your competition that you could possibly have. Thank you for joining, and Have a profitable trading week. Be well.
Thank you, Bob, for your wisdom. Always appreciate your presentations. And honestly, I have to give Bob a shout out for believing in us so early on. I remember meeting Bob at a CMT event a couple of years ago, and he was really all about TrendSpider and wanted to learn every way that he could use it to his advantage. And just a big thank you to Bob for believing in us so early on. On to Ross. He's going to talk about his strategy using TrendSpider, and let's jump right into it.
Thanks, Jake. Hi, everyone. This is Ross from Trader Lion, and I'm going to start off today by giving everyone a little bit of background about who I am. I'm going to keep it short and sweet. I started off in the industry straight out of school as a retail broker, and first book I was given to read, as soon as I was done with school, was How to Make Money in Stocks by William O'Neill. And the reason I tell you this is that is the methodology I began following in 1995. And it's the methodology that I continue to follow today with some slight tweaks that I've made along the way to fit my style. For those of you who don't know who William O'Neill is, he's Investor's Business Daily guy. And I was very lucky to, through a client of mine in the retail business to land myself a job there just a couple of years after reading his book. And that's kind of where I've got my education and why I follow that methodology to today. So that being said, I'm going to tell you, that methodology starts with from the big to the small. I look at it like the Russian dolls. The big Russian doll is your general market. So I have a very specific methodology for figuring out whether the market is in a confirmed uptrend or not. Once I know we're in a confirmed uptrend, William O'Neill, the can slim is his methodology. It's a trend following methodology. So once we've got that big the first doll out of the place, we know the general market's in an uptrend because our rules were met. We then start looking at what we ultimately want to do is invest in the best stocks, the strongest, most fundamentally sound stocks, and the most technically strong stocks, leading industry groups and sectors. And reason that I say that is industry group and sector combined have about a 50% direct correlation to the direction of a stock's price. So we know that the market's going up. We're in a general market uptrend. So now I want to hone in on which sectors, for example, technology. And within those sectors, there's many industry groups, whether it be software, technology, semiconductor chips, which break down into, another several levels from there. So now that you've got an idea of exactly what it is that I do in general, I'm going to give you an idea of how I've now used TrendSpider and have ultimately made it an indispensable part of my process. I use a few other charting programs, but at the end of the day, I always find myself coming back to the TrendSpider charts just because they're absolutely clean and so easy on the eye. I mean, that to me is extremely important. There are, and I'm going to tell you, there's three things that I find indispensable. I'm going to start with the first one is their auto fibs, which you can see right here, auto fib. If I click on it and click back on it, you can see they drop the fibs right on those charts for you. Now, I have a basic understanding of fibs. I'm not great at it, but there's one thing that I do know because I've got some good friends in the industry. I've done my homework, and I will tell you this: what I've been told is fibs work. They're a big part of the market now. They're programmed into a ton of the algos that are whipping this market around, and so in any event, I find it extremely convenient to be able to. So whether you're using now, I don't want to get deep into screening on TrendSpider. My partner Ray at TraderLine and I have been using it. It's fantastic. However, once we get through our screening, let's take that to the next level. Then I will input, as you'll see here, to my right, my watch list. These are a handful of stocks that I'm watching currently that have come out of my screening process. So once I've got them in here and during the market, now we're talking, the market's open, things are running, and I love that I've got a nice clean screen to look at with all of my stocks, for example. So now I can click on one stock, and there you go. It drops the fibs on top right there for you. As far as I know, on any other software, you've got to understand how fibs should be drawn, where to draw them, where to drop them. So to me, this is entirely the great. To me, it's fantastic. And because they work, I have found them to be, for me, an incredible tool to work along with my moving averages and other levels of support and resistance. And so to not have to, become a pro at that and be able to flip through my charts without even thinking about it and have them drop right on there, it's fantastic. Let's say I want to, take a, and with the click of a button, you can make them disappear. So that's one thing that I have found. Yes, fibs are available on other charting software, but not in this manner. So I find this to be, I find myself constantly putting all of my stocks into TrendSpider's charting software that I'm interested in at the end of the day. So there's one of my absolute favorites. Now, just to clean things up here, I would tell you this. My next feature, and I would say this is probably my #1 feature and has been since I've been in the business, is trend line alerts, real-time trend line alerts. Again, there's plenty of software out there that does it, but what I like about, again, here is it's super easy. You simply pick yourself a trend line wherever you want to. Let's try, I don't know if we've got a chart here. Here we go. Let's we're gonna take it on a declining tops line now, just across. It's not exactly correct, but this will create an alert a little bit early. So now you can see we can either go on breakthrough, touch, bounce. I mean, the options that you have here are incredible. So what I used to do on another system, and when you have a limited alerts, this becomes incredible. The sensitivity here, I find, so for example, let's say I wanted to ultimately buy this stock through the high, which I now have a slanted line, which is what I used to do, is I would draw a slanted line like this. So when the stock broke through, I would see the alert, I would take a look at the volume and know whether that stock is, as it's approaching highs, is it trading huge volume? Because to me, I only buy stocks that are, moving on huge volume like that. So now okay, so let's go trend breakthrough. I like it that way. So that way it'll drive you crazy every time it touches the line up or down. It'll let you know, but it's better than missing. So what I love now about, let's go ahead and delete, or instead of having to draw two lines or constantly drop an early line and then redraw it until it gets to the high, so that you're constantly aware. Whoops, that is the wrong one. You can set that sensitivity within a range of that line that makes up for what used to be my early trend line, for example. So let's go ahead and try and draw this trend line back at the high, straight across, how it was before. So now when we create an alert at this line, rather than having to draw an additional early line on the way, I can simply set the sensitivity to, here we go, 85 cents, let's say. Now I know 43 cents. We can go ahead, create alert. Oops. Actually, we need to click that. So now I don't have to worry about setting up an early alert. It's going to let me know 43 cents ahead of time that it's approaching highs. I can look at that volume. And the beautiful thing is it's that much less manual stuff for me to track. And it also saves me an alert because you've got limited alerts. So now I can now, one alert does the job of 2 or 3 alerts. So that's, and obviously drawing trend line alerts is significantly easier than having to set a whole bunch of price alerts, especially when the market's busy. Let's say you have your eye on 30, maybe as many as 50 stocks. I'll tell you that my lists tend to be too big. I'm embarrassed to tell you that my alert list is probably about 150 names, and on a busy day, as you can imagine, it gets super busy. So as I've been transferring my alerts over to TrendSpider, it's been a great process. I've been learning as we go along. I've never had, so much, so many options to tweak those alerts. So anyway, now why do I love those alerts and why do I go through that tedious process? The reason I will go through, and I don't have them set on all of these stocks now, but what I will tend to do is, let's say in my group of 50 or 60 alerts, I try to keep, let's say, 5 to 10 stocks from each leading group. And so let's say I'll always use a sensitivity when I'm using the TrendSpider alerts. Instead of drawing an actual alert with an early alert, I can now draw the actual alert with the sensitivity of how early I want to look at it, to get an idea of where volume is. So once I've got like I said, 50 or 60, little mini portfolio of what I consider to be the leading stocks in the leading groups, when I'm keeping track of alerts like that throughout the day, it easily helps me keep my finger on the pulse of the market. I know when you become familiar with it, it doesn't take long. So I can see if the software group, is software moving together? Is it just one that has a problem because of earnings? Is it the market leaning on software? Is it being, that sort of thing? I always want to have an idea of what the leading groups are doing and where they fall within the realm of rotation. One thing, and this doesn't have to do with TrendSpider, watch the leaders, watch the rotation. As long as there's healthy rotation out there in the leading stocks, the volatility in the market tends to handle itself. So that to me is why it's so important. I find, the group leadership is number one to me, and this has really given me a way to a clean, simple, easy way to keep track of it all now. Now, another beautiful thing that I haven't touched on here, and we're looking at right here, are analyst estimates. Not only do we have a graphical view of estimates, you've got all, as you can see as I scroll down here, you've got, as you can see, we've got all of the statistics, all of the firms, what their rating is, what date that rating, and more importantly to me, when I've got a stock, if I tend to stick to the biggest leaders with the biggest earnings growth. So let me tell you, so as far as analyst estimates go, again, it's available in probably in 19 different places and then some out there. However, the way that it is, first of all, it's free here. That's huge. Usually if you're getting any sort of estimate for free, you might get a quarterly estimate. I don't know where from. However, this is phenomenal free information. And not only do you have all of the numbers in detail, I love to know, for example, Dexcom, I know has huge triple digit growth. So I always keep in mind that an analyst estimate will tend to be on the more conservative side. So when I see all this green and all of the majority of buy ratings and estimates being raised, that puts a big, that at the end of the day, let's call a spade a spade. You want to invest in companies that are making the most money, and preferably the most money at the quickest pace for the longest time. Reason being, as we discussed, it's in a leading group. They've got triple digit earnings for the last 3 or 4 quarters, phenomenal institutional sponsorship, all that sort of thing. So now I've got it on my watch list, and you can see we've formed a base right here. So this high where we just talked about and setting an alert earlier, that is a legitimate alert. We've got about a 43 or 45 cent sensitivity on there, which means it'll alert me a little bit before it actually goes through so I can get a look at volume. But let me, so let's back up here. And so now to some of the basics. Once I've chosen Dexcom as a stock interesting for my watch list because I like its base, I like its earnings, all of that sort of thing. Now I'm looking for entry areas. So I've already begun, this is one stock I have begun to accumulate already. Let's start over in the left corner here. These are the moving averages that I use. The basic ones I find that most people use are a 50 and a 200-day moving average. A 10-day moving average is rather common. I use a 21-day simple moving average. Some folks tend to use a 20, but a 20, a 21, either one works, whichever works for you. And then below the simple moving averages, you'll see that I've got a 65 exponential moving average as well as a 23 exponential moving average. And let's just say I've spent the time and done the studies, and they're effective and they work. So let's take a look at how I'm using that on Dexcom. Okay, so I'm going to start by first drawing another trend line here. Let's mark this prior high and bring it straight across. So we can see right here is our 50-day moving average. This is our black line. In general, you can see Dexcom ultimately gets support and closes above its 50-day moving average after it shakes below. So what I have found in the way that I use the 65 exponential moving average, and this isn't just for Dex, it's not for every stock, but it's for a lot of stocks. I find that when stocks tend to shake out below their 50-day moving average, a lot of times it's picked up by a 65 exponential. In this case, it's never even really gotten there. So to give you an idea of how I'm attacking this stock, we've got a prior high here where we just drew this line sitting just above its 50-day moving average. Not to mention, and we'll get to this, all of its other moving averages getting in a nice tight bunch right below the price here. That's a whole other thing that I look, that's a technical thing that I look for, tight moving averages below price. It often precedes a move to the upside. So what I've been doing, keeping this in mind, is as I'm watching Dexcom on its 50-day moving average over the last few days, I've been nibbling the stock. We've got support at its, and with my sell stops at the 65. So you can see over a few days, you're up a little, down a little, up a little, down a little. The 65-day moving average has kept me in for the last week or so. So now I've got an average just a little bit higher than its 50-day moving average. And my next add point, and this would be more of your William O'Neill can slim buy point, is on the breakout through its old high. So that's where we've set this alert here. And that would be how I ultimately, that's how I ultimately get into a stock. And obviously, rather than waiting for a stock to break out and running the risk of missing it, or it's breaking out in a super fast market and you've got a price 3 or 4% above your pivot. When you're doing it this way, you get to sneak your way in on a moving average with minimal risk. And when you're finally pyramiding on the last of your position, maybe even. And so let me back up with you. Often what I'll do, and the reason I set the sensitivity maybe about 50 cents early, $1 early, maybe in the case of a $400 or $500 stock, you want a little more room than that. The reason I will do that is I want to know before it gets there, because let's say it's a day that the biotechs are running. I want to know before Dexcom gets to my actual pivot point so I can look at that volume. If the volume is cranking away at, double average or 50% more than average, a lot of times I'll sneak my way in before it crosses the actual pivot point. So that's why I like that. I like to set the sensitivity so I have an early look, and I can often cheat my way in if I can see the volume ramping on the way to the pivot. Let's go ahead and take a look at another one. I think we've worked Dexcom over pretty well. Just for kicks, we're going to take a look at Datadog here. This, as you can see, this is a relatively new IPO. It's software stock, so it's technology stock. They've got, again, it's another stock with enormous earnings. You can see we've got the estimates are in great shape, and so far the stock's built a base. You can see it broke out. We've had a nice run to the upside, and now we're building another base right here. There's no real form. You couldn't really call that a double bottom, a cup and handle, or anything like that. However, what I do know is that this was a big leader. It's a new stock. The earnings are huge, and more than likely, this move isn't over yet. So here we've got another stock, and granted, there's a much bigger range between the 50 and 65-day moving averages here. So I haven't started accumulating this stock. However, here's my thoughts and how I would approach this stock. I'd start by, now let's take a look here. There's by no means a cup and handle to be found here anywhere. But however, I would agree that you could say this is cup and handle-ish, in so much as you can see we tried to push through the 50-day, we failed, we came back. However, we're getting support above its 65-day, and we tried to push back through again today, didn't quite make it. So to me, in terms of risk reward, rather than trying to play this 50, 65-day game like we did before, just because it's a little widespread, I would rather see Dexcom break out again. So I'm going to set a trend line here. We create an alert. Oops, I drew it wrong. Let's pretend we set the alert at that line for now, so I'm not wasting time. I would set it with the sensitivity a little bit early, so that way when Datadog is approaching its pivot, again, I can take a look over at the volume and see what the volume looks like and see if I want to try and sneak my way in early. And you can see if you're using this high to work your way in, now you can use your 50-day moving average as your sell stop, and the risk reward there to me is phenomenal. So you're buying roughly through 89, 89 and a half. You got your sell stop down at your 50-day, which is over here exactly. Oops. Well, here we'll rough it at about 80, 87. So you're looking at, you know, maybe a few percent risk for upside that could be explosive. You know, assuming that the bull market continues, a stock like this could easily double or more again from here. And I'm going to back up and move forward to the same time. I want to show you, again, we're going to click auto fib here. And what I love about this is, do you see how beautifully this all lines up? So now that we've got a fib on here, and again, like I said, amazingly, the fib, you know, right here, you're right in the gap. You can see we're finding, so this is, you know, so on top of a stock that I already like, I love the way that the fibs drop in right on top of what I'm already using to give me further reference points. So you can see we're getting support right at this fib, which is also where this gap down ended. You can also see we've got the 62 fib, which is one of the big ones, just a hair underneath what we're using as a pivot point. So that gives it that much more significance. So now our pivot point is through the 62 fib, as well as the high here with super tight sell stop at its 50-day moving average. So to me, that is a superb risk reward setup, and another one that I'll be watching along with the Dexcom. So that being said, I don't know how much more time I've got here, and I don't want to be a hog, but you know, as you can see, for starters, it's a beautiful system. It's clean. It's very easy for me to see. I love being able, at a click of a button, to be able to add something so significantly helpful in addition to what I've already got. And I'll tell you what I'm figuring out as well is, in a fast market, the alerts on here work rather well, which has been a problem with some other systems. So all in all, I would say, you know, triple thumbs up for TrendSpider. I've been bringing it more and more into my routine, and Ray and I talk about it. Ultimately, this is going to be the charting software that we're going to make as the home base of our business. So what you're looking at here, I love the chart so much, we're eventually going to drop them into the newsletter and everything else that we do. So that being said, I hope that was helpful to you all. I appreciate you listening to me ramble here, and happy trading.
Thank you so much, Ross, for that presentation. Great stuff as always from Trader Lion. And let's move on to Braden, aka BT Trading on Twitter. He's going to talk about how he uses TrendSpider to find an edge in the market, not only with the anchored volume by price using the volume shelves, but a few other ways how he really uses the platform. And let's jump right into it and see what Braden's got to tell us.
Thanks, Jake. Hi, it's Braden from BT Trading here at BT Stock Trading on Twitter. Today, I'm going to be talking a little about how I use TrendSpider for finding my entries and exits in swing trades. So really, I watch 7 main sectors. I watch the tech, semiconductors, financials, energy, industrials, healthcare, and then a growth list that I watch. So some of the key stocks on my watch list there. For tech, I like Apple, AMD, Amazon, Baba, and Facebook. Semis, AMD, INTC, and Marvell. Financials, AXP, BAC, and C. Energy, I like Halliburton, Oxy, and WMB. Industrials, American Airlines, BA, Caterpillar, and Delta. Healthcare, Abbott, Amgen, and J&J. And then finally, a couple stocks on my growth list. I have AYX, Crowd, DDOG, DocU, Etsy, Melly, Work, and Zoom. So those are some stocks that I work with on a day-to-day basis. Today, I'm going to be working with you guys on a chart on Amazon. So when I find my swing trades, which is where I trade mostly, I'll look on the 2-hour chart and the daily chart. And then when I do my monitoring, I'll intraday monitor from the 15 or the 5-minute. So really where I start is I'll start with drawing trend lines from the auto trend from TrendSpider. So we'll get a trend line there. And then next I'll go and draw some support and resistance lines. So as we can see here, we have this bottom line acting as support in this channel here. And at the top, we have this resistance line. And just this week on Amazon, we broke out of this resistance. So after I get the resistance and support lines drawn, I'll add anchored VWAPs from just various points. Oftentimes I'll go from points of resistance or support or on bounces of key trend lines. So here we'll just add all of them to start and see how we're looking. So we'll add from the top here, the resistance. We'll add from the bottom of the trend line here. And that's also going to be our swing low, since that was lowest point in this pattern. So one of the things I like about these anchored VWAPs is combining them with the volume shelves here on the volume by price. So as you can see here, this volume shelf is acting as support, or the VWAP, sorry, are acting as support here. Acting support again, and then as we act on this volume shelf, zoom in so you can see a little bit better. The volume shelf right here, and supporting on these anchored VWAPs, we get a nice push. About 8.5%. So that's one of the things I look for entries is I'll use these anchored VWAPs acting as support. And then also when I see them in combination with the volume shelves, that's something I'll look for. So I'll talk about a couple of different patterns today. And really all these patterns I won't use just by themselves. So I'll talk about divergences, supply and demand zone bounces, and then 3 particular patterns. So I won't use any of these by themselves, but I look for multiple of these patterns popping up at the same time. So if I see we're bouncing on anchored VWAP here, and I'll look for the volume shelf here acting as support, that'll give me the confirmation to enter the trade around here for this breakout here. So after I have my anchored VWAPs drawn here on the chart, we'll go back and we'll draw some supply and demand zones. So it looks here like we have a level of demand from this gap here. And as you can see here, once we bounce into this demand zone a couple times, we bounced out pretty hard. Then we'll draw supply zone as well. So as you can see, we tested some resistance up here at the top of the supply zone last week on Amazon, came back down, tested again, second time, came back down, and the third time was the charm, and we tested and broke out of that. So now on Amazon, something that I look for is previous resistance acting as support, and then previous supply zones acting as demand zones. So now that we're up and above out of this supply zone on Amazon, one thing I would watch for in the future is for this pullback to this the bottom or the top of the supply zone, act as demand, and then watch for a bounce up out of there, assuming tech and the overall market holds up. So we have our supply and demand zones drawn. And then next thing I'll look for is I'll look for any divergences in the RSI, MACD, and then I also like to add in the percent R as well, just to kind of compare with the RSI. So here it looks like we have what's appearing to be a hidden bullish with lows of the price here increasing up to here. And with that, we have the RSI slightly decreasing, as you can see there. So that'd be a hidden bullish divergence, which would signal a possible trend continuation. So we pushed up, pulled back here, and then this hidden bullish divergence could signal a possible pop here out of this previous supply turn demand. So that is also something I'd be looking for. And then after I have all those drawn, I will just kind of check for any crosses in MACD or any crosses between the 50 and 200 moving average. So I'll remove the VWAP so we can see we don't have any crosses. This is the 50. We have the 200 moving average. Don't have any crosses there, but we do have a MACD cross here. So that's something I would watch for. Possible bear cross on the MACD could lead Amazon to push down to this supply turn demand like we were watching for my possible entry, possibly. So that's kind of how I set up my chart. So really, once I get going into my chart setup, there's 3 patterns that I'll mainly watch for. And I'll watch for entries. My entry patterns are in the 50-day EMA or just the 50 EMA pullback or SMA on the 2-hour or daily chart. And I like to use this if the stock is in an uptrend, and especially after a 50 to 200 EMA or SMA cross. And for me to like this pattern, I want the SMA EMA to be at an angle like this. I don't want it to be flat. One of the second pattern I look for is I'll look for 4+ day consolidation with the MACD either positive or crossing up. So I'll go through some examples of that as well. And then third pattern I like watching for is just simply like blue skies breakouts and all-time high breakouts. So when stocks lately we've seen lots of stocks making bull flags and breaking into new highs and then making a bull flag, break a new high. Once we get that first initial all-time high breakout, that's when I like to get in on those. And I'll go through a couple of examples of that. So let me clear my chart here so it's a little bit easier to read. So as I mentioned, one of the first patterns I particularly like to watch for is the 50 SMA, 50 EMA pullback. So I'll just kind of get my basic pattern lines drawn here. Okay, so as you can see, we have Amazon playing in this triangle right here. So as I mentioned, I like to use a couple of these patterns or indicators, or whatever you want to call them, in conjunction with each other. So obviously a bull flag here and triangle pattern. As we reach the apex here, we are nearing the 50 SMA. And as we pull back to that, you can see we get a nice little launch here. As I mentioned with the VWAPs and the volume shelves either, we also happen to fall on a volume shelf at the apex of this triangle right before we got that pop on Amazon. That was something that I played a couple weeks ago. So that's one of the things that I'll watch for. As I mentioned, I like this SMA to be at an angle and not flat. If it's flat, the stock isn't really in an uptrend and therefore doesn't have the momentum I'm really looking for to get that next push up. So another pattern I look for is the 4-day plus consolidation with MACD positive or crossing up. So I know I saw this not too long ago on BABA. So we'll start with the clean chart here. So yes, looks like here, Baba, we had the consolidation pattern that we're looking for here. One, 2, 3, 4 day consolidation, then a pop of about 13% in a little under 2 weeks. Also, again, here we have the consolidation. And the pop, nice pop of about 25%. Also saw this one on AMD back in July as well. Right here we saw consolidation, 1, 2, 3, 4, 5 days, and then a nice pop. About 12%. And then after we pulled back down, we had same pattern again of the consolidation here, which led to the big breakout. So usually when I do these patterns and then we get the confirmed breakout, I'll use the Fibonacci sequence lines to determine my exit and price targets. So after we break out, I would use this first where we first pushed and then pulled back. I'd use that as the first resistance from the fib line. As one of my targets. So as you can see here, we pushed up, resisted here. We pushed up, resisted here, came back down, and then stayed pretty well acted within these fib lines. We saw a test there, pull back, test there, pull back, and then once we got out of those fib lines, we pulled back, or we pushed over and stopped and rested on the top of it and reset. So that's kind of the 4-day consolidation pattern that I'll look for. And then next, one of the third patterns I'll look for is just kind of a blue skies breakout, which we can actually also see here on AMD. So if we go back here and see the previous all-time highs here. So this 4-day consolidation pattern actually worked in conjunction with the blue skies all-time high breakout. So our previous all-time high, it was here on AMD around 59.60. And then as we got this breakout over here, it was pretty blue clear skies. And again, I would use the same Fibonacci lines to calculate my entries and exits there. Also saw this pattern on SQ square in June and July when we broke new highs here. Retested up here. And I'd be playing this on a more of a, I'd be buying this the day that it would be breaking out above this line. So I'll kind of go into my entries and how I would choose there. So here we have a clean break above the previous all-time high and then the retest. So one of my favorite entries on this is on a break on and then the retest of all-time highs. I'll buy again on the retest as long as we don't break below. Pretty simple strategy there. But then I'll also, like, if we're breaking out in the morning, I'll like to wait until the mid-morning premium crush or just around after lunchtime to buy in if it's really flying on a breakout. So just kind of to recap, 3 patterns that I really look for, my continuation breakout patterns. I'll look for the 50-day EMA SMA pullback in an uptrend, the 4-day plus consolidation, and then I'll also look for the blue skies all-time high breakouts. I'm a full-time trader, trade options 5 days a week over at with my private Twitter group. You can find me on Twitter at BT Stock Trading. Thanks for having me, guys, TrendSpider and Jake. Appreciate it.
Awesome stuff, Braden. And I got to say, Braden is someone who I introduced the anchored volume by price to really not that long ago. And the guy's already a pro at using it. So just an absolute genius when it comes to learning stuff quickly and being able to apply it. So, a big thank you to Braden for really going out and learning this and then applying it and sharing it on Twitter. It's always appreciated. Now let's go into the last segment, looking at the Strat with Rob and Sara, and see what they have to say about not only the Strat, but how they use the Strat using TrendSpider and getting an edge in the market.
All right, thanks, Jake. Hello, everyone. I'm Rob Smith of the Smith in the Black channel at Ticker Talker here at TrendSpider. And today, I'm here also with my friend Sara. And you may have heard about the Strat and you may not have, but today you're going to hear about the Strat and you're going to learn a little bit about how you can use it, especially also using TrendSpider software. When I first met the TrendSpider guys, Dan came over and he expected just to be like any other traders with their support and resistance indicators. I was like, Dan, let me show you something. And he sat down on my desk here for a few minutes. And as I started to explain it to him, his eyes started to glaze over. And all he could say was, interesting. And then Jake came over and they decided that this was important enough to put into their software. So right now, I'm going to show you just a little bit how it works. It's very simple and very simplistic, but it makes sense, which is a great part of it. And that's why it's also now into their software. It's someday going to be in every software, but for right now, we got it right here at TrendSpider, so I'm going to show it to you. Allow me to share my screen. Okay, so here's a very basic understanding of what the Strat, which stands for the strategy, is. All right, so if you can see this chart here, from one bar to the next, on any chart that you look at, there's only 3 possible outcomes for the next bar. So if you can see my cursor, you can see this bar here right in the middle is an inside bar. What we mean by that is it wasn't strong enough to take out the previous high, and it wasn't weak enough to take out the previous low. Thus, it's inside of here. So when I said there's 3 things that can happen, we call them scenarios. This is scenario 1, an inside bar. The second thing that can possibly happen is that you take out one side, either the highs or the lows of the previous bar. So in this case, this bar took out the highs of this. That's a scenario 2. Scenario 3, which is very important to understand, is you take out both sides. Here, you'll notice this bar came up and took this out, and then went all the way through and took out both sides. Very important to understand because that's how we gauge magnitude. So when you have combinations of 1, 2, and 3, then there's only so many ways price can reverse. There's a few other ways, but if you basically know the 3 main ways that price reverses and or continues, then you can also use the TrendSpider software scan to look for these things. So what I mean by that, one type of reversal is a 2 in the one direction. You can see my cursor. This took out the previous high. 2 in one direction, countered with a 2 in the other. 2-2 reversal, we call that. The other kind of a reversal is a 2 in one direction. You can see this bar took out this low, an inside bar, and a 2 in the other direction. The other way price reverses is the 3 bar itself. Goes up, attempts to take this out, and reverses back down. Now, if you know that, right? When you hear people say, I want to buy on a pullback, a successful pullback will look like one of these, I promise you. All right, so it makes things very identifiable. We take out subjectivity. You'll also notice here how price continues. Price continues this way. A 2 in one direction, inside bar, 2 in the same direction, all right? Or a continuation is also another 2. So you can see this took out that, that's a 2, that's a 2, right? Or price can continue by a 3 going in this direction of continuity. So what is continuity? Continuity is what really can help you, as opposed to using indicators. It's way faster. And what that means is, you'll notice here, this is the SPY monthly. Started the new quarter and the new month, right? So what we use for continuity is 4 separate openings. The 60-minute, the daily, the weekly, and the monthly are our main ones. Because what that means is price doesn't move, it aggregates. For every buyer, you have to have a seller, and for every seller, you have to have a buyer. So the question is, who's more aggressive? It also helps us pick up on algorithmic trading. You have to tell an algorithm 4 things. What vehicle, SPY, Apple, what do you want it to trade? Do you want it to buy or sell? How do you want it to buy or sell? By staying on the bid, taking the offer for buying, hitting the bid, or staying on the offer for selling? And when do you want it to do it? So when we start a new month here and this starts going green, as opposed to way up here, 200-day moving average, when we have that trading higher than all of those openings, we know what the participants are doing. We know what the algorithms are doing because they told them what to do and they're showing their hand. They told them to buy. They told them to do it now. They told them to take the offer, right? And they told them to do it now. We know that. So we can combine all this stuff. We're never surprised about what's going on. We know what reversals look like. We know what continuations look like, and we know what the algorithms are doing. And so when we can combine all that, then it's a matter of magnitude. How far is it going to go? So you'll notice here, this is an outside bar. So once you start coming back through a certain range, we know that outside bars exist. Therefore, we're going to take that out because this is red and they're hitting the bid. Without getting too confusing, there's several ways that you can implement this. And that's when you're going to see the different types of setups that TrendSpider can get to you. Right? When I say the 2-2, they can do it, right? The 2-1-2, and then you know whether you're tracking a reversal. So if you start on a longer term time frame and you have those conditions met, then you can break it down to a shorter term time frame and get your trade setups. So this time I'm going to hand it off to my friend Sara, who's going to show you exactly what I just told you. All right, Sara, take it away.
Well, thank you, Rob. There's a couple favorite features that I'm going to show you on the TrendSpider website that I use personally for the strat, and kind of like what I do, what I look for, how I scan. There also is pre-made strat scans, but I kind of tweaked mine a little bit. And TrendSpider's customer service is so good. If you have any questions, like they respond to you almost immediately. And I would say if not immediately, at least within 24 hours. So they're definitely top notch for customer service and questions. They also want to hear our feedback and like kind of what they can do to make the platform better for their users, which is a huge deal. You know, not many platforms really care what their customers have to say. TrendSpider definitely does. So you can create your own watch list. So here is my personal watch list. This is just my small little universe because the market's so big and I only focus on these stocks and it kind of keeps me sane. So if you go up here, you can click on Market Scanner. And if you look in the bottom left, I have some scans that I made. So what I do is I look for inside bars on any time frame, like preferably the weekly and daily. So kind of what I do is I'll start with a weekly inside bar scan and kind of zoom in from there. So for instance, I had posted a couple of days ago some inside week scans to keep an eye on. So I'm going to show you kind of how they played out in a second. But so I clicked this, the weekly inside bar, and then I hit scan. And then it will populate a list of inside weekly bars. I might have to, hold on, let's look. Yeah, I'm gonna have to click current candle. So click current candle. So that means that it's still currently inside. And then you'll hit scan again. So kind of from here, what I'll do, it's kind of small when this scanner screen is up. So this will show me that Wells Fargo is inside on the week. And then I can kind of mark my levels up. Got to shrink that back down. And here's all the tools, which are really cool. So kind of what I do is I just mark the levels. So these are my levels of interest. So basically, if Wells Fargo breaks above 24.89, I want to be long. If it breaks below 23.61, I want to be short. Well, how do I do that? And the other like fantastic feature that TrendSpider has is alerts. These are so huge because we can't remember everything that we do, and we can't be watching everything all the time. There's just way too much. So what I like to do is you can just right click on your line and you'll hit create alert at this line. And there's kind of a few different things that you'll do here. So you can tell the alert when you want it to alert you. So do you want it to alert you once it's broken through? Which me personally, that's too late. I don't prefer that one. I really like the touch one. So I just click when it touches this line. And this is my favorite part. Let me move this a little bit. So this is the sensitivity, which is kind of like a buffer zone. You can see this area and watch what happens when I slide and drag this. So it'll alert me ahead of time, which is amazing because it gives you time to get prepared, set some orders so you're not missing things. So let's say 25 cents is kind of small. And here it tells you, how far away you'll get an alert. They alert you on your email and you get a text message, which is really cool because, I have my phone next to me all day, so I get the text instantly. And then this one asks your confirmation candle daily. I'm a day trader, so I prefer a smaller time frame to be alerted on. So like the hourly. So if the hourly candle comes up and touches in my little area, I'll get an alert. And they're cute. They have all these happy little alert names. I always just say like inside, week, and up, go long. And then you could just, if you wanted to buy options, you could put options in your notes or whatever. And then you just hit create alert, which is really handy. And some of the scans that I talked about a few days ago played out so insanely well. And I wanted to kind of show you guys. Give me 1 second. Okay, so like I said, this is how I start my scans. I start on the weekly. So YY was on my scan for an inside week and up. And that's a new alert. Don't pay that one any attention. But so the alert went off at 90.11. Per the Strat, my magnitude was to take out the top of this candle, which was 91.90, which yes, that's not a tremendous amount, but you'll see we did do it. So the inside bar took out the mother bar's high. That one, not the most impressive one. NVAX was an inside week. This one was really nice. So the alert alerted me at 133.30, and the target per the strat, 112.51. I mean, that's a, what, $21 move? There's a lot of money there. Roku. Woo! I sound like such a nerd when I talk about some stocks. Okay. So Roku, the inside week alert went off at 152. The actual magnitude was 157, but we got all the way up to like 167. That was incredible. AMD, I'm just going to show you these other ones real quickly. AMD, same thing. So inside week, I wait for that alert, set my alert, tell it to go long. I can go program this in my broker platform whenever I get the alert. And like I say, I do it before it happens. If you do it exactly on the line, you're not going to get the best entry. I know that was a really good one too. Same thing, inside week, that was the target. So 1383 to 1240. And the last one I have, Facebook. Holy Facebook. So Facebook was a double inside week. The magnitude was only to take out 278, but oh man, that was so explosive. And again, let's see. So here we go. Here's a perfect example. We can set an alert right now for tomorrow. So let's delete these lines. And I like to kind of border out my candles, so I put lines on them. Okay, so now what Rob had mentioned, time frame continuity. Typically, because all time frames are bullish, we want this to break out. But we are at all-time highs, which Rob will say is exhaustion risk. But if we do break out, there would be the target. So let's set an alert. So we're going to right click, create alert at this line. So touch. So let's see. So this is Facebook. So my target for the alert is 301, but I want to be notified probably like $2 ahead of time. So we'll say inside and up long. And then we can, whoops, here we could put target like 305 and then create alert. And then also if you want to look at your alerts, they're in here. Oh wait, that one just says triggered. Oh, here they are. So these are the alerts that I have set. If they've fired off, so FedEx fired off today for me for an inside day and up, so I can delete that. But kind of the other thing that's really cool and involves the strat are these are sort of indicators, I guess they would call them. Yeah. But they show you, they highlight easily for you if something is an inside bar or an outside bar, which is really nice, especially if you have terrible eyes like I do. Sometimes I'm like having to see if the lows are, if it's actually inside or if it's outside. So these are very helpful. So the way to do that is go to patterns, and here you'll notice all these say the strat. So you can, there's so many different combinations of the strat. You can select any of these. Me personally, all I really care about is inside and outside, because I know what I'm looking for next. So I don't really use these top ones. So here, inside bar, there's a ton of, the candle patterns are endless on this list. But like I said, for me, it's really helpful. My eyes are bad, like I said. So these are huge. I love them. And I know TrendSpider is also working on numbering the candles with a new indicator. So this will say 2, 2, 2, 1, 2, 2. So that'll be really nice when they get that going. Okay, so one last thing that I want to explain about the market scanner and why I like it so much is because, you know, the market is so big, and I have, like I mentioned earlier, you know, my own personal watch list that I like and I use. I'm comfortable with these names. I like the way they trade, even though Apple does not like me. So when I do these things, there's this, when I say these things, I mean, when I scan for inside days, you can select, you know, your own personal watch list, which is really cool. And the other really cool thing is, like, TrendSpider offers all these different things that I can just scan for at any time. So let's say, you know, I want to see if there's any inside bars in the NASDAQ. I can just click NASDAQ and I can click scan. And let's see. Oh, no inside bars. That seems unusual. Here, let's do S&P 500. So, you know, you can pick what you want. So if you want the S&P, or you just want your own little watch list, which that's what I do, that's what I'm comfortable with, that's at the top. And the reason why I look for the inside bars is because it's consolidation. I know what to expect. When the range breaks, I know exactly what my target is. And that's basically it. Okay, so once again, I'm Sarah. This is how I use TrendSpider to trade the Strat. And I hope you have fun trading it and found this helpful.
Thank you so much, Rob and Sarah, for that presentation. The Strat is essentially like the 8th wonder of the FinTwit world these days. Everybody's talking about it. Everybody's using the hashtag the Strat. So it's always nice to really learn what exactly the Strat is and how you can use it in the everyday trading world. So that wraps it up for today's show. Everybody, thank you so much for your time watching all the presenters. A big shout out to all the presenters coming on and sharing their strategies with us. Remember, the sale ends today, 35% off for any plan, monthly or yearly, and make sure to sign up. You have a 7-day free trial, so you have no obligation up front. And everyone have a great rest of the day, and thank you so much again for tuning in.